What's up, Igor?
Hello, everyone.
How
Hi
you
Igor,
doing?
hi Richard.
Jannie,
How's it going, guys?
the same team,
It's the
Same
same
thing.
team, yeah, A team for sure.
A team. Good.
Better
Did
result.
you,
Yes.
did you, Richard? Because I know you also you focus on the NASDAQ. Did you look at the markets after our session, or not really? Because it started to range. Did you notice after that the trade that I've managed to find? It was
Yeah.
just
So yeah, it just started ranging. I mean, it's still in a pretty sideways type of move, right? Range.
yeah. I'm not sure if there's anything particular you would like to share, or would you like me to just
Well, I
share
think
my
you can
screen?
go ahead with the Nasdaq if you want to right now. I
Yeah.
honestly think nothing's much is going to happen until the FOMC meetings, right, at 2 p.m. Eastern.
It is FOMC day. You're absolutely
Yeah.
right. So yeah, I agree with you. It could potentially be a pretty quiet day. Everybody waiting for that to come out later today. Okay, so there's my screen. Yeah, I mean, yesterday, if you look at, I think I got my trade on this 15-minute candle. Yeah, like right at the highest point at the VWAP, one standard deviation. So I got that trade and it made a new low. My profit was not at the low; it was just slightly above that. I'm not sure if you saw that. But since then, no real structure really. It was just sideways consolidation, and now the
Yeah.
same year, this pre-market, it was just bouncing off resistance, bouncing off support very nicely. But now we are like consolidating on this resistance area. And on the half an hour, you can also see like it's rejecting off that resistance area, and on the 1 hour, this pivot point. So we'll see what happens at the open, but I do also expect maybe a little bit of a mixed reaction. If we just have a look at the daily time frame, yesterday we obviously had that move lower, but now we've got this very clear range. If you look at, if I just draw this horizontal from that high, and then this low. Okay, so we are in this little range now. So we'll see if FOC, what?
FOMC.
What? FOMC. FOMC is gonna break out in a very clear direction, or is it gonna give us like a bit of a spike? I don't know what to expect. I really don't know what to expect. I'm just hoping that it's going to find direction. Maybe not after the announcement, but definitely tomorrow. That's usually the case. So I shouldn't say definitely.
Yeah, I
There's no
mean, that should
definitely in
give us
trading.
hopefully a bit of direction going into, well, end of the week and next week as well, right? Hopefully.
Yeah.
I don't know, Igor, what is you more of the fundamental guy? Do you think they're going to keep the rates the same or slightly drop it and surprise us a bit? I doubt they're going to raise it. I don't know.
Yes, of course. First, I expect to be as nothing to change because it's 80-90% of the time it will be like they said. So the problem is that I read a lot of economists that they have some insights that there is a chance that maybe earlier reduce the interest rate. We don't know when. It can be in the next time. It can be in June. It can be today. And if that happens, it will be really surprise. So I know they will never increase interest rates. Now they can either keep, either they reduce. So because of that, I just a little bit have small betting today for the push, as you know, of my trade from the yesterday. So we will see what will happen.
Yeah, absolutely. Well, I still think I'm still a little bit bearish on the Nasdaq. I still think it's going to go lower, but in the short term, after the announcement, we'll see if it's going to go up and test this highest point, or even go slightly higher. But this is obviously the daily time frame, so it's a slightly longer outlook, but I do expect it to go lower. So that is.
I also think so. Perhaps one more low, just to run those lows, and then a reversal. But who knows?
Yeah.
Try not to read into things too much and just follow what happens price-wise, right?
Yeah, the thing is about the daily time frame is like it can give you some rough idea of, you can see what you see. Yeah. Okay. But the smaller time frames is really what's going to give you a much clearer picture of what you can expect in the smaller in the shorter term. And if that lines up with your bias on the longer time frames, then that just makes for a really high probability setup. But yeah, at the moment, I definitely don't have my bias is not as clear as it was yesterday. That's for sure. So we'll just see what happens at the open. Igor, do you want to quickly show your chart?
Yes, I would just want to show something. I got idea from this your question. I will just share to show you one thing that we never talking about, but can be very important. This is little bit educational thing. I pick tomorrow, for example. Tomorrow is a Thursday, and we will have official bank rate for British pound. The same thing as for US dollar. There's no problem there. I just want to talk about crazy price spikes, about one important thing that nobody talking about a lot of that. It's everybody talking about official bank rate. For example, it will be the same, increase, decrease, or something like that. But there is one thing that can really move the market. It's official bank rate votes. So you see, for example, here in the Forex Factory, you see these numbers 027, 0990, etc. I just want a little bit more educational thing, just to explain that. So the first number that you see is the votes to increase the rate. The second number votes to cut the rate. And the third number votes to maintain the current rate. So, for example, we have the first scenario, 027. That means 0, no members vote to increase the rate. 2, 2 members vote to cut the rate. And 7 members voted to maintain the rate. And for 090, 0 members voted to increase the rate. 9, all 9 members voted to cut the rate. And 0, no members voted to maintain the rate. So
are there 9 members in total then?
Yeah. Yes. So this is the second number, and a lot of times, what is the problem? Sometimes we don't have information related to US dollar, how many people vote for something, and the big dogs, institutional traders, they have a Bloomberg. They know everything. In the same second, they have everything, and sometimes we see, okay, nothing special in the report, everything is okay, but they see these numbers, and because of that numbers, they start to push price in one direction or another. So this is the something that we just need to think a little bit, and to try to wait for the results, and to think about a number of people that want to cut the rate. So just
that's very interesting, right? So they do a forecast on how many people they think.
Yes, because this is like politics. Few members they want to cut the rates. Few members always want to increase the rates. And in one moment, you just see how 1 or 2 of them change their mind. And when that happens, that means that in several months we can have completely different picture. So this is the huge politics, and it's sometimes it's interesting for me, because a lot of time before I even watch this. So I just trade watching the official bank rate, but now, especially for British pound, I watch this. It's very, very important. So I want to see what will happen. And if we see, for example, this result 027, that means that, okay, GDP is better. We don't want to, maybe we will slow down. We will not decrease the rate soon, or something like that. And then could boost the British pound dollar. So this is something that I watch. I just wanted to share with you. And of course, for today, like I said, 2 big news. One is the FOMS. We know already that. But just to tell the traders, do not forget, just a couple hours after that, GDP for New Zealand dollar. That can be really crucial, because if you see the weak dollar and we have these big GDP results, we can see the New Zealand dollar just go up, and that can be good trade too. So This.
Do you have that? Do you have like? Is that some? Are you watching that? The New Zealand dollar, US dollar? Do you have like?
Yes, yes. I started to watch today because I just want to see what will happen, because if fundamentally we get really good GDP for New Zealand dollar, I know that in next months, and we can see really good price there, and it's worth, because I can just share the screen, just people to
show
see
chart.
right now to see the chart. I will do that. Just a moment. Stop sharing. I will share the screen like this. So right now, we are above the simple moving average 50. And
just hang on. Sorry. Oh, your chart just came through now. Sorry, Igor.
There we go.
Excellent. So we broke this simple moving average 50. The whole January, we were below there on the daily chart. We broke that. We started to go a little bit up. We have two big candles, bullish candles. Now there is some kind of I saw that on all major Forex pair, we have small, maybe it's a bearish divergence, but small bearish divergence, some kind of the slowdown, but it's a common before the big news. We don't know what will happen here. So the last candle was bullish. This is the bearish today, but it can be changed in couple hours, everything. And we can really see the good trend. The relative strength index indicator is positioned well, I can say. We can say about that it's a good mood. So I will watch that, just because it's interesting thing for swing trades where you are below the 200 moving average. So right now we're below 200 moving average, and if today we get beautiful news and strong push here and enter into the trade, I'm sure that we will. The first target can be 200 moving average, but after that, it can be really a bullish push. So nice. I will just monitor.
Okay, and what about the pound US dollar? Are you still in that trade, or did you close your position?
Yes. I would just to remind people, yesterday we were in this yellow zone. Just to check, do you see that? Yes, you see. Well, we were in this yellow zone. I entered into 2.2950, and I said myself, if we see the new high, I will not close my trade, and I didn't close my trade. Maybe it was a mistake. I didn't. But nevertheless, I just keep my stop loss at 1.2950. It's a break even. So 8 pips to hit the stop loss right now. But we will see what will happen, because this is the huge rejection zone. It was the yesterday rejection zone. Right now, it looks like that. So I will just wait. I want today, before the news, to see a level around 1.3 and to wait for the further gains. So
yeah, those trades really suck, right? Like it looks so good, it's doing well, and then it just kind of reverses against you. But they happen. It's part of it.
Yes.
But I wanted to show you something, Igor, and I just wanted to, because I also looked at the pound US dollar, and I just want to know if this is also part of your approach, if you will, when you look for potential opportunities. So I'll just share my
stop sharing screen.
Yeah, if you don't mind, I'll just quickly show.
Of course, no problem.
So let me see. Okay, so you can just let. I'll see when. Can you see my screen?
Yes.
Okay, so that's futures. Let's have a look at. Okay, so this is the pound US dollar, and that's the. Can you see it clearly, or not?
Yeah.
Yes.
Okay.
Yeah, that's even better. Okay. All right, so this is obviously where I don't know if you have the EMA. I think this is the 100 moving average, so it just bounced off there. But what I like to look at when it comes to Forex, and you let me know if this is again part of something that you make part of your strategies, is like I always look at where I am on the monthly time frame in terms of how far it's already moved in relation to what you can expect on average. So that's where the ATR comes in. The ATR is really, really important for that, because you can see I've got two ATRs there. It's a 2-period ATR and the 14 ATR. So the 14 ATR is obviously, that's the average size of the candles over the last 14 candles. That's what the 14 ATR means. And then I have a 2 setting, which is a lot quicker, obviously. And that gives me a sense of, are the current or the latest candles, are they stronger than what the 14 ATR suggests, or are they slower? So what I look for here is, like on this very last candle, I've got another indicator here on the left-hand top corner. It's just basically measuring how many pips this candle has moved so far in the month. So you can see this has moved 450 pips. So you just add the low
from the monthly.
This is on the monthly. Yeah, okay. This is on the monthly. So from the low to the high, so that's 450. The ATR is 458 on the 2, and it's 420 on the 14. So it already tells you that based on the average size of the candles over the last 14, it's already moved the average size. So if I see that, then I'm really cautious to, obviously, like things like the news event later today. I'm so scared to say, I'm going to say it wrong. But and the other so news events can definitely skew this picture. Like, for example, if you look at this monthly candle of the year, and there are obviously exceptions, but if you know what you can expect on average, so if you know that the average candle is about 450 pips, this is the monthly, then for you to expect 900 pips is unrealistic. Yeah. Does that make sense? So typically when I see that it's already moved the average of movement you can expect over a monthly time frame, and if I go down to a lower time frame now, say let's go to the 1 hour, for example. Okay, now if you expect a breakout here, there's nothing wrong with your the thinking behind the strategy or anything like that. But if you keep in mind the fact that it's on the longer time frames, like the monthly, it's already moved what you can expect on a monthly basis based on the last 40. So it's all stacking probabilities. So then if that's the case, then really, if you do see these setups, like you've identified it perfectly, right? Your entry was spot on. But then a take profit here would make a lot more sense based on what I just showed you on the monthly. Does that make sense? So for you to expect this to go much, much higher is just the probability decreases. So again, that would, but this is a beautiful run to the upside. I can see what you're seeing here, and maybe you're expecting the same move. I'm not saying it can't move further. I'm just saying when it comes to stacking probabilities, you just want as many things in your favor as possible. And if I see that, like on the monthly, it's like, I would rather wait for maybe like a pullback or something like that to give me an opportunity to go to the upside if that's still my bias. So yeah, I just wanted to point that out to you. But that is, for me, the ATR is very important. And even like intraday trading, say on the daily time frame, for example, I would look at, if you look at what the ATR is here, the 2 is 53.8, and then the 14 is 82. So what does that tell you? It tells you that the average size of the candles is actually much lower than what the 14 suggests. That and you can see it in the chart that the candles are much smaller. Apart from that,
and this time is the daily, right? Yeah.
This is the daily. Yeah. So if I see that, if you just add the high and the low together, that's close to 50 pips. And then look at the 2 ATRs, 53, and then look at the size of that candle. So what would make for this to be a really good, if you have a long bias, then you can, if you can find an entry on the smaller time frames, like if everything lines up, whichever time frame you like to look at, then you can in that case catch this entire ATR right to the open of the candle, even though it has potential to go back higher. But I would rather say, okay, if my bias is long, I would try to catch 60 or 70% of the ATR. Does that make sense?
Beautiful.
Like this is separate from the strategy you would focus on. So you still look at your trend lines and support, resistance, and all that. But if you just keep in mind that the ATR, you can see the two ATRs crossing above the 14. So that tells you, again, I like to put the two ATR over the 14 because the 14 is too slow. It gives you the average over the last 14, so you can get a big move, right? And it will hardly reflect on the 14 ATR. It will take, it needs to continue to trend higher and higher for the ATR to eventually point to an up direction. But on the 2, you can catch it very, very quickly. You can catch it. You say, oh, it's shifting right there.
Yeah.
Just with the crosses, you can just, it's shifting. So you can pick up that so ATR can be used in a number of different ways. It can tell you what size move can you expect for the day based on what it's done over the last 14 days and what's doing in the short term as well compared to the last 14 days. And then, so that's the momentum side of things. Sorry, no, that's not the momentum side. But the momentum is like when the 2 is above the 14, it just tells you that prices now, the average size of the candles are much bigger than what the 14 suggests. But even though it's much bigger, I would still go for the smallest of the 2 ATRs in terms of like what can you expect the range to be, right? So if you get now this is very important because this is when breakouts you can avoid false breakouts this way as well. So if you see again, if you see, I wonder if I can find something here, a consolidation breakout. Probably not going to find anything now. Typical. Okay, let's have a look at this now, for example. You can see, let's just call this this bear flag here. So you get that leg down, and then you get that slight pull to the upside, and then the second leg. But if I see that on the daily time frame, this is if I'm focusing on the 15-minute time frame, if I see that it's already moved 110% of the ATR, then this is going to be it's going to just decrease the probability of the move. But if I see that at this point, it's moving up and it's coming back down and we only at 45% of the ATR, then I know that's just one thing to add to your probabilities. Okay, what I'm saying is if you look at the daily ATR, you can avoid setups, in that direction because it's already statistically, if you want to put it that way, it's already kind of moved the range for the day. Does that make sense?
Yeah.
Of course.
Absolutely.
Beautiful. It's very good to use that. I just want to add, when I create the systems, for example, I using that little bit advanced approach. What we do very often, I find, for example, on the chart, last 7 days low and high, last 24 hours low and high, and a lot of that points. And what I do, I find for the entry point of my trade, what is the distance in daily average true range, daily ATR? What is the distance from the 7 days low and high, 24 hours low and high, etc., etc.? In that way, when we create expert advisors, for example, we learn just you talking about to learn can we calculate the good risk reward ratio and to avoid some stupid trades. So ATR is really crucial, and you're completely right. And your strategy is excellent when you draw oscillator down there and to watch and to think about that. Especially, this is very good for filtering the bad trades.
Yeah, I mean, I also had this was some time ago when I was still playing around with the ATR. I would typically just focus on, I would have all the pairs open. I don't do that anymore, and then I'll literally wait for a cross. I'll wait for a 2 to cross above the 14, because when the 2 crosses above the 14 to the upside, it doesn't mean it's going to go long. It just means the candles are now bigger in either direction, up or down. So I would say okay, it crosses above, all right. Okay, so obviously at the close of the candle, there it crosses above, and then I'll look at the candle itself and see does the candle itself present? Do I recognize it? Is it this is a very a bearish candle. Yeah, I'm not
Yeah.
sure if I would have taken this one, but maybe on, but this is the 4 hour, so there's definitely room for some profit here. So if you just keep it really, really simple like that, you can also, that's a way of trading. It's like you look for like a momentum shift almost. You look for like, okay, the average size of the candles are getting bigger now, and you can just focus on those Forex pairs as well. That's one way of doing it. But there are better ways. That's why I'm not doing it. But it is a way you can use it. So yeah, it's not really something on. We haven't even looked at the open. What is going on? Yeah.
That's 10 minutes in already.
Wow, it's slow. Okay, well, it's as expected.
It's very slow.
It's exactly as expected. So we're gonna have to wait for tomorrow, I believe.
Yeah.
Do you don't trade the news event, right? Not the actual news event, but like say a few minutes later. Do you do that or not really? Richard, sorry. Richard.
On big days like this, I prefer to just sit on the sidelines, to be honest. You know, like the FOMC stuff coming out, that's at 2 p.m. So I don't know what's that, 8 p.m. our time tonight. So by then I won't be in front of the charts, but I'll definitely be on the phone to see
It's
on my
8
trading
p.m.
view charts what's going on. So
yeah,
I just
I'm
find,
the same. I'm the same. Sorry to
especially
interrupt you.
in this climate right now, you know, with the uncertainty in the markets, you know, that's what's reflected in that huge price drop that we had as well. Markets don't like uncertainty. So, you know, with that in the back of the mind and not knowing what's going to come out with the federal funds rate decision, I just, you know, there's been many situations like this, been trading for quite a few years. I just find it's too risky to trade, to be honest. You might eventually get it right, and then, you know, it looks great, and then bam, it goes the opposite direction. So very wishy-washy type of price action. Just not ideal. No follow through, in my opinion. But you know, does it always happen like that? No. But just, I don't have the patience for that, to be dead honest with you. But there we go. Can I just look at my charts quickly?
Yeah, sorry. Let me just stop there. Like shit, mate. Anyway, I've moved my screen, so now like the time of the chart is like I have to look over there. But anyway. Sorry, carry on.
Okay.
Can you see my screen there?
Yeah.
Right, so this is the S&P. You can see price within that time zone of mine. Let's just go back to the 5 minute here. Took out, what's this? Yesterday's sort of like a lower high or higher high in this case. After that initial sell-off, that little bounce you were talking about, bit of ranging price action. Just took it out, and now we're moving lower again. So it's within that time as a window that I like to take my trades on the ES and the NASDAQ sometimes.
Yeah.
So maybe if we range bound, sell high, buy low sort of thing. But it's what happens in between. I mean, good luck if you were trading during this mess over here. You know?
Yes. Yeah.
That's avoid that sort of thing, because that'll just make you crazy. You know?
Yeah, and the easiest way, just for if someone's wondering how do you identify, a trend, just look immediately to your left. Look immediately to your left, and you'll see, like point out to that price action that we were in yesterday. You just look immediately to your left and see where's the closest high and low, and if you like somewhere in between, you're in a range. Okay?
Yeah.
That's the range. That's the quickest way. Usually when you're in a breakout, you'll see that when you look immediately to your left, there's nothing. It's clean.
Like avoid.
Yes. Right. So that's the easiest way to explain how to identify whether you're in a range or not.
No, 100%. So honestly, and even if I do get a setup here, I won't take it on the ES. We can look at crude oil quickly. Yesterday, obviously, also very strong move lower. Crude oil being quite weak. We had a strong bounce upwards, and this was, when was this? Sort of this morning, overnight session. Then price, I didn't really pip any sort of like proper levels that I like, but it didn't do that yesterday. I don't know if you guys remember this. setup that I was talking about that I did not take, where we had a strong move upwards, price broke previous price structure, pulled back a little bit. It's that secondary high thing.
Oh
we were
yes,
talking
yes,
about.
yes, yes. Yeah, you showed this one. Yeah, so we
And
talked.
then we
Yeah,
broke down very strongly, and we also on the 1 minute had a pretty large fair value gap,
yeah,
which is typically that's a very nice setup. Break price structure. Price actually sort of like fails to do a breakout, bounces a little bit, and when it does actually finally break out, you get these fair value gaps or acceleration gaps, which is just another nice clue that price might continue in that direction. What did I do now? Which is what happened here. There was a very large fair value gap that formed right over there, and you can see beautiful one test, second test, and then that very strong move lower.
yeah. That's a
Right,
beautiful
so
move.
yeah, so that's on the 1 minute. I should just go back to the 5 minutes. When we look at this move now, crude oil, I'll maybe take a trade as well. I don't know what your guys' sort of experiences with crude oil and how the
No,
FOMC meetings actually affect crude oil. I do believe it is a market that can be affected by FOMC rate decisions, especially. Because the story goes, if they raise rates, which we obviously talked about now, that might not happen. We never know. But if they normally raise rates, then, things are more expensive, right? So then apparently people drive less to save fuel or they don't have money to put in the tanks, right? And then their
yeah,
demand would reduce, which would then create further downward pressure on crude oil. Well, that is the theory. So I would leave things the same. I think crude oil is just going to continue going lower. Not sure how it's going to be affected by today's decision, and we obviously don't know. We'll have to wait till afterwards. But we did have a situation where I would say similar to yesterday, but we have that strong bounce upwards. Price started moving lower, and you see this line over here. If I actually go to a 1 minute time frame, that was the more obvious price structure point prior to this high that we've just seen. That high being around 66.85. Start
yeah,
making a little bit of an acceleration to the downside. Your Elliott wave analysis dudes will probably tell you this is 1 second, and then obviously a very impulsive looking move to the downside. So this could be the start of the next move lower.
Yeah.
Could be, right? So formulating a type of a plan of price action, what to expect if it does follow that plan. And then I'll be willing to, since it is an FOMC meeting day, to take a trade. But price will have to come all the way up here, give me a clear 5-wave type of sequence. Because generally a 5-wave sequence kicks off, either a deeper correction or the start of a reversal lower, whatever the case, or continuation to the downside. So I'm just looking purely at price action here. There's
yeah.
a fair value gap over there, but it's like a bit of a gap there in my data, between around about 66.76 to the upside, to the downside 66.74. So a very, very small gap if you think about it. It's just 2 ticks, right?
Yeah.
But there is one nonetheless. I'm on a 1 minute time frame. I won't be comfortable selling down here. Like I said, if it does come up all the way there, increases my profit potential if I'm right. And then I can just place my stop also above a very obvious type of level, which was this high over here. So I'll keep an eye on this. I think if we do get another drop lower, that will give us a 5-wave sequence, then potentially get a corrective move. It could take any shape. But if it can move into that area, I'll take it. If not, then I'm happy to sit on the sidelines.
Yeah, and just to point out that structure looks very similar to the one you traded or showed yesterday, right?
Yeah.
If you look at that peak and then you get a lower peak, the only thing there is I would have missed that trade because it didn't give me a pullback. So I always wait for a pullback because it gives me a really clear risk, and also I know if it works, I'm going to get a good risk reward ratio. If it doesn't pull back, then your stop loss is basically like a guessing game. Like, where do you put your stop loss? Like right at the top? That wouldn't make sense. Risk, in terms of your risk reward ratio potential.
Because if you look at this, like this is now after the fact, so I could really look like a freaking pro here. 1, 2, 3, 4, 5, and then this is obviously after the fact. Well, I won't say obviously. This is what we call a double zigzag. So 2 ABCs conjoined by one, what we call the WX wave, another ABC. So, and then a move lower. So where we are right now in that sequence to the downside, I think we're here somewhere. Right? The one I just showed you guys now. I don't know to change that color. Let's just make it yellow. Oh, no, it's done that. Bear with me.
It looks like a golden egg. Leave it there. Leave it there for good luck.
So I'm thinking we potentially, if we do get a little bounce, it doesn't go to new highs, or get another move lower than that, then we have a 5-wave sequence, and then expect some sort of correction. Could just be a single zigzag, could be a double zigzag. I mean, it could be a triangle, it could be anything. You know what I mean? Again, I don't really trade these patterns too much. It's just I do apply it loosely to try to figure out, if I get short here, for example, right at that moment, and I'll look again at the most current price action, then I'll be very wary, thinking that, if this is a third wave, we're getting a little fourth wave bounce, then we might actually get a deeper retracement, and I'm not entering at the opportune time. You understand what I'm saying?
Yeah.
Obviously, the best would have been over here.
In hindsight, for sure.
For sure. In the bigger picture, you're probably looking at a first wave sequence, second wave sequence, and this clearly being that very strong move that we've seen lower.
I just out of curiosity, like
some sort of a third wave. Yeah.
That pullback. Which time frame were you on now? Was it the same time frame? Yeah, that little peak, that second little peak to the upside, right? If you can you draw just out of curiosity, just Fibonacci levels from that high to the low, and see because you can just see with the eye that's probably very close to the 61.8.
Yeah, I can see that already. Or 78.6.
So 68.1.
Around about at 61.8, it started going sideways and then declined. Yeah. Second waves generally like that sort of a deeper retracement, or I like call them phases rather than waves. So if we just had to come back to the current price action, you see we actually did get that little low now while we were chatting, or we didn't. No, it did not break that low yet. So what we could be seeing is a little correction. If it does not go to new highs, I'll still expect this to happen, and then get that secondary move to the upside. So remember that oval I was drawing, I don't think it's done yet. It might still need to make another low, if that makes sense.
Yeah. And
then if we do bounce higher, that secondary high that we were talking about, wherever that comes in, potentially 61.8, maybe deeper, something like that.
Yeah,
but again, guys, it's speculation, right? It's you never know. The markets will more than often prove you wrong about things.
Look, but this is why you need to stack probabilities.
It gives you a little bit of a plan. You know what I'm saying?
Yeah, exactly. It's about. It's about stacking probabilities. Like, it's literally just like it's more likely to do this than that. That's your job.
Yeah,
and you are going to be wrong. But as long as you.
And this is the thing, if you follow Elliott wave analysis, I try to always say I apply it very loosely. I just like to look at the structure. Did we get an impulsive move? Then that's potentially your third wave, as electricians would talk about. What sort of ratios do your corrective patterns typically revert towards, like 61.8? Like fourth waves typically have triangle formations more often than you would have zigzags and stuff like that. And quite often, if you see a beautiful symmetrical triangle formation, and the price then makes one more low or high after that formation, or that when that pattern ends, typically your triangles occur in the majority of the time as the penultimate corrective structure prior to an important high or low, depending on what time frame you're obviously looking at.
Yeah.
So very, very interesting sort of stuff if you want to start studying or looking into that kind of stuff. But yeah, it just gives you that expectation. I mean, there's a lot of traders. This is 100% true. If you put two eliticians in a room, then you're going to get two completely different types of analysis. It's like. But the other thing is, like, maybe there was a little third wave in here. And this is the thing. You can't try to break your head too much about counting if you're using elite wave to try to be a perfectionist about it, because there's just no such thing, in my opinion.
No, definitely not. Igor, do you wanna jump in?
About this chart, can we see yesterday price and today price together, just to see something? Just to see something. So this,
I'm gonna get a bigger time frame out for you. What do you want to look at? Like an hour, maybe 15 minutes?
Maybe hour, just to see something. Just to see something. Yes, I see.
So you see, this was obviously yesterday, and then we had that one hell of a move lower.
Yes,
Was it yesterday? Yeah. So what I'm thinking here is, after that strong decline in the bigger picture, you can look at that. Boom. I mean, it's been doing this for quite some time, right?
Yes.
This entire thing, you can almost call that range bound, but maybe just a correction that's ended, and now price is making its way back low again. Who knows? But yeah, like Jannie said, look left here. There's a lot of mess here in crude oil. So probably more fit
It's
to
not
trade
like
on a little smaller time frame than on a 1 hour or something like that.
Yes. There is one movie, Groundhog. If you watch that, Groundhog Day. So I think that today is like a yesterday, because so much patterns I see same as yesterday. For example, pound dollar, euro dollar, everything. We are right now on the same levels, right? Like yesterday in the same time. So
look at that.
It's really crazy.
Yeah. Guys, I want to just we can continue.
Do you want to take over there?
Yeah, because I'm like, I may take a trade. Yeah.
There goes the
We'll
ES.
see. Okay, so this is what I'm waiting for. It's just like now, the timing is not okay. So you see, we got is that a bounce off?
Are you thinking about a long trade?
Yeah, because you see it broke out of resistance. You can see on the 15-minute, half an hour is also breaking out, and a pretty strong push here. So we're getting a test here on the breakout. Only thing I don't like is like it's so close to the new hour.
Are you sharing your screen?
I am. I think you still sharing yours. Yeah.
Yes.
Okay. So you see that though, I just would like it to come a little bit closer. You see, does this make sense? Like breaking out on the half an hour. There's another minute left.
Yeah.
Very strong engulfing candle here on the 15-minute, and now on the breakout on the 1 minute. This is my trigger time frame, and now I just came to retest that breakout level. This is exactly what I'm waiting for, and now I just want to wait for a push to the upside. Okay, so do you have any questions on the setup? It's very straightforward. It just makes it like really easy for me. If when I look at multiple time frames, I can just get a good read.
So like a breakout retest type of trade.
Yeah, and obviously it's a 1 minute time frame, so I'm not, I'm not in the trade for very long. I just want to, like, if I can get like a 1 to 1.5 or 1 to. Okay, this is now the new hour. Okay, okay, I'm in there. And so I'll move this slightly higher. Oh shoot! What now? Sorry, guys. I'm not really. I use this, like as I said yesterday, I use this platform for analysis, not really trading. But I do prefer to place the trades like on the same platform so you can see.
So
instead
where
of
do
me
you
just
normally execute then?
it like MT4 because I'll do CFDs, or you can do futures. Doesn't really matter. That's the beauty about NASDAQ. You can trade CFDs and you can trade futures with NASDAQ.
Yeah.
So. Okay, so let's see if this trade's going to work, but hopefully that would make sense. Like just a breakout. Yeah, on the 15, you see those little arrows. They're just breaking out of resistance. And then you same on the 1 minute. The setup just needs to make a sense there as well. Okay, so that's the trade. My stop loss is at a reasonable level, so even if it comes down and test it again, then that's not a problem. If I get stopped out, that's fine. I understand it's probably not the best day to trade, but the setup makes sense to me. So that's the reason why I take it. Okay, so okay, so this is that will probably be like probably a 1 to 1.5, something like that. Nothing too greedy. So let's see. Is this the way we cheer them on, like yesterday?
Go
Come
down.
on, Nancy.
Go up,
Come
sorry,
on.
not down.
What is your stop loss and target, Jannie?
Say again?
What is your stop loss and target?
You mean like percentage-wise?
Yes. Just.
I mean, no. Okay, this is not. Look, there's a difference between futures and CFD trading. With futures, the smallest you can trade is 1 micro. Right?
One contract.
One micro. Okay, because one mini contract is 10 micros.
Yeah.
So that's the smallest you can trade. But on CFDs, I feel you have much better control over your risk because you can. Let me just show you. You can have some sort of like you've got risk management tools. So I can say I want to risk 1% of my account. Then if I click on
if I click on your position sizing.
Yeah, so if I click on sell and I say I want my stop loss to be over there, and I click on execute trade, then it will automatically calculate the lot size I should be trading. And then if I lose the account, that would be terrible. But if I lose the trade, then I know it's just going to be 1%. You don't have that level of control to that degree on futures, really. Okay, you can just like go for the smallest. I'm trading here 2 micros. This is what I'm trading right now. Okay, 2. You see that 2, and this is the MNQ. So that's the micro NASDAQ futures. Yeah. Okay, so that's 2 micros. So you see, so the profits are not very exciting, but it's also it's a lot more comfortable to trade with smaller contracts or micros compared to trading. Some people trade 1 contract, 10 micros. That is massive. You can very, very quickly wipe your account up.
On the NASDAQ especially, it moves really quickly. I mean, $1,000 move on the E-mini occurs very quickly.
Yeah, exactly.
On 1 contract, yeah.
Okay, so let's just see if this is going to go there. Not really too fast, but again, like even if this trade goes against you, if you lose $80 or $17, it's not going to like there's no emotion attached to the outcome of that trade. Now, the same is going to be true for if you win the trade. It's going to be so small. It's going to be like $100 and so on. It's very difficult to get excited about that, but that's exactly where you need to be from a psychological point of view. You don't want the outcome of the trade to affect you in any way. It's like the outcome is almost irrelevant. You're focusing more on the process.
Yeah.
And that's like if you can like make sure you stay in that zone or in that mindset of the outcome is not really relevant, then you'll do much better compared to like being extremely nervous about the outcome of the trade or FOMO, so scared you're going to miss out of a trade. What, scared of what? Missing $60? Like if you like really like bring it down to that level, you're going to go, whatever, wait for the next one.
But you also got to trust the process, right? So
yeah,
focus on following that process, and then the rest should fall in place, hopefully.
Yeah, it's like, I mean,
Not
even
just
with
on the monetary value of it.
Yeah, don't focus on the money side of it. That the money is like a byproduct. That's like, I mean, like if you're going to like start exercising, and you want to have that Greek god physique, which I gave up on many years ago already.
Oh, really?
No, like, but my point is like, if you okay, it's getting.
Is that what you covered there in that portrait behind your head? You surfing on?
Yeah, it's me. It's me. Like when I feel down, I just stand up and look around, look at myself in the mirror. Okay, I just took profit there. Okay. All right, so that was a nice little trade, but hopefully it made sense what I was looking at.
Yeah.
And can you see the difference when you look at multiple time frames? It just makes it easier. You just have a better read. And then the 1 minute time frame, if you look at like this little position here, there's a breakout. This is the 1 standard deviation. Are you going to go long there, or is it going to go to the 2 standard deviation? Oh, I don't know. Yeah, it bounces off the 2 standard deviation VWAP bands. Is it going to continue, or is it going to reverse? It's really difficult. Like, I would say impossible. You'll probably get it right 30% of the time, like 28% of the time. But if you can just look at longer time frames to get a bigger picture, you'll make much better decisions. You'll just make much better decisions. So, but anyway, this is probably going to go much higher, and that's perfectly fine. What were we talking about before I? Oh man, I think I need to go.
Talking about Igor
for a dementia checkup. Yeah. So we were talking about. All right, Igor, do you have something to talk about? I think I'm glad you got a little trade at least.
Always. Okay, just I want to something I'm testing right now, so I can share with you and audience. Just talk a little bit about that. And inspiration for this is you, Jannie.
Yeah.
You told you something.
Do you want to share your screen?
Okay.
Okay, let me stop my screen.
Let's see. Can you see? Okay, I'm just I'm testing one free script in TradingView. The name of the script is Breakout and Retest. And this is absolutely free. Everyone can use. I need to just test to see does this script repaint some moments. I think not, but I need to test a little bit more for some things. Why this important? I will just show you what this is. Just as we can use volume profiles, just a simplified version. And I will just show what I like here, because I want to use a little bit pivot points like Jannie. So this is the script that I will just show. Maybe here we can see. We want to find the price level where we have a retest marking, and to use volume delta ratio to enter into trade on the right moment. This is very good. In the moment we want to enter into the trade, we know area we want to enter the trade, just to find the right price and to get additional trigger. So for example, we have example just from the yesterday. As you can see here, we have calculate the delta of the volume. It's a positive volume for buying based on this script. And we have multiple retest area, and just show there, and you can see just touch perfectly several times. I just watch. It's very good. It's very good to find that levels. And I just want to test this in the future to see can this help me a little bit sometimes to find the real volume. And the whole idea is actually to buy when there are more sellers than buyers in a low volume area, and sell when there are more buyers than sellers in a low volume area. So this is the whole truth here. So I just watching. I like levels because these levels align with my levels a lot. Either I do not use volume profits a lot, and it uses pivot points too. So it's interesting. I need to research a little bit more, but just for the audience, you can just add as indicator and test it for your own, just to see how that works. I
So
think
Igor, does it actually show you the volume delta during the breakout phase? So, like,
yeah.
was there actually a lot of buy volume coming in, or was it just sort of a very low buy volume and for an upside case, and maybe that could lead to a fake breakout type of scenario? Because, like, if that is what it is on the green sort of horizontal bar on the top side, then obviously way more buyers during the breakout than on the
Yes,
than
of course.
sellers, right?
It's indicator can be a lot of lies and false breakouts, of course,
Yeah,
but I just want to
not
test
the
it
low.
and to just align with my other triggers, and I just monitor that. And what I wanted to show again, not to forget, I didn't forget that, because Jannie talked about ATR and about the process, and it's really good. So I just want to show you something that I started to analyze in last couple weeks, and I'm testing that. I will just share the screen just to see for here it is for the audience that watch this. You have on Trading View, you have the indicator that calls market structure oscillator from the Lux algo. It's a very popular oscillator, and what I wanted to show is in my process I'm using relative strength index indicator trend line on daily chart to figure out the periods of the bullish and bearish trends for a lot of assets that I trade. However, this indicator doing very similar thing, but visually it's better. Visually is better. So you can see, for example, the last year, 2024. So from the for the month April, we have the bullish sentiment. We have a bullish trend with you can see the blue line. Then we enter into the bearish moment. 3 months we were bearish, and again, right now we're in a bullish mode. So sometimes it's very important for me on the long way. This is we can see a weekly chart, on daily chart. We can make some conclusion in which stadium we are, because for the major currency pairs, usually 3-4 months we are bullish, 3-4 months we are bearish, 3-4 months bullish, and etc. That situation is from 2016. So last 9 years, we have this kind of situation. We have the periods of few months in the bullish phase, then bearish phase, bullish phase, bearish phase. And it's very important because when we are in bullish phase, we have a lot of false bearish breakouts. And this is why I like to know where I'm in the market, so to push myself for the more buy trades than sell trades. Either I should, of course, trade on the both sides, but I'm trying to push myself to more buy trades and to remove the sell trades, especially when I trade British pound dollar. So I just wanted to share this indicator. It's free indicator. You can use on Trading View, of course, and I can say it's very good. It's completely aligned with my relative strength index analysis. Really, it's
Very
very
cool.
it's very cool, and it just give you where you are in the moment. And about my trades, like I said, just to make a recap, because I didn't do that for today, I just want to say for British pound dollar, like I said, I already have a trade at 1.2950. I'm still 16 pips in profit, and I think that we will stay in this. Even this chart is looking like we break this trend line and everything, but I think that everything will repeat like yesterday. So yesterday, as you can see, this yellow area here, we were in this stage just during our session, and when
Yeah.
our session ended, just price started to go up. So I think
Yeah.
that we are in the same spot like yesterday. And if you go to euro dollar, very similar situation. However, we're a little bit lower here, and I see, for example, little bit movements for the bearish side. But as you can see, there is a small trend line that I put here, and using this trend line, we're still bullish phase for euro dollar, either on the intraday session. So, like I said, my bullish bearish validation point for today is here, 1.0860, somewhere there. So I'm still bullish for euro dollar. Even this chart is looking like we are below the yesterday low or something like that. But based on that experience all these years, I don't believe yet in that. so either for the Aussie dollar, for example, we have two bearish candles right now, but everything can change because, as you know, I have a long swing trade here. I still believe in the strong push up. Even this look like, if you just watch this, it looks like, okay, we are on the top, we can go down or something like that. But of course, today Fed announcement is very important for the future movements. And maybe if something unexpected happen related to US dollar, some very positive news, I will close my trade. But it needs to be really, really positive thing, something really crazy. But I will monitor that. And the last thing that I monitor is US dollar, Japanese yen. Jannie, yesterday you're really right because it was really good trade for hedging. So with Aussie dollar and British pound dollar, where I'm buying this US dollar, Japanese yen, buying will be hedge position, and I should last in the Friday, I should make a buy order. I didn't make, but I just want to tell that it was a really, really good setup when I watch right now. But like I said, my plan from the yesterday, as you know, I want that we break this channel, then to try to retest channel, and in that moment, I want to enter into trade and to keep my long swing trade for US dollar, Japanese yen. So these are my setups for today. And of course, I will monitor New Zealand dollar because of the news of the GDP today. If we get very good news for New Zealand dollar and bad news for US dollar, this really can go up. So I will monitor that.
Yeah.
So
Okay.
This is
Awesome.
my setups for today.
Quite a few going on, but I think, yeah, I mean, as long as you've got a plan in place, that's the main thing. But we'll see what happens. We'll see what happens after this evening or afternoon, wherever you are. Tomorrow is just going to be, I'm pretty sure, like all this uncertainty, most of the time, not always, you just kind of get that, like, okay, it's finding direction now. So
Yes.
it was a bit like that. But yesterday was a nice surprise, just a massive drop at the open. That was completely unexpected. But yeah, that was probably the only move for the week, really. And then obviously the little trade today based on a breakout. But yeah, we'll see what happens tomorrow. But for the Forex space, I find it so difficult to read just one chart. I have to look at all of them, and just because they flow, they flow. And
time frames, or you're talking different
time frames.
Yeah,
Because the one flows into the other one, and sometimes they can flow into either direction. Sometimes from the longer time frame, it flows into the smaller ones, and then other times the smaller time frames it's like a domino kind of thing. You can really, it makes it so much easier to read. I don't know if you can put 4 charts on there. Do you think that's going to be possible, Igor? Probably not now. Probably not now. There's too many.
We will. Oh, no. I didn't want that. I know what you want.
I just crashed your MT4.
Yes. I need to. I have indicator for that. I will find for the next time. It's very beautiful to put it all together and to watch 1 hour, 4 hour, 40 minutes, 50 minutes, etc.
Yeah.
So it's cool thing. It's cool thing.
Yes, I have seen personally. I've seen how what difference it makes in people's trading. So
Yes.
you know, it does make it makes it just work instead of just like you're going to this time frame and then going over to the other one and then going to the other one. If you just have them all in front of you at the same time, you make better decisions. You just do. Like there's no debate about that. So you know, so like if I look at this 1 hour time frame, personally, I would like, you know, I admire you for spotting an opportunity there. Because to me, it's like, what's going on there? Like that's a mess. I can see it at the previous lows. I can see that where that yellow block is, the one that you identified yesterday. We're basically back there. But in terms of structure, it's not, for me, it's not very clear. And like if you zoom out, I don't know if you can zoom out.
And which part? This?
No, just like zoom, like press that the zoom out button on is that MT5 or whatever.
MT4, okay.
Just more? Can you zoom out a little bit more?
Of course.
Oh, there. Okay. Yeah. You see, that's really an ugly chart. That is such an ugly chart.
Yeah, but look this. So yesterday at this 1600 on my at 4 p.m. or on the MetaTrader platform, and today the same time, the same candle I just see right now, and the same push I see. So
yeah, I see that.
So repeatable all the time, and I just feel the market, and I just see that we will go very close to 1.3 and wait for the news. So
you know, I just want to like, are you, sorry to interrupt you, are you keeping an eye on the dollar index?
Yes, I keeping. I see the. I will just show here. Just to, it's good to check. You're right. It's good to check that. I will just remove this indicator. Okay, just to change the screen. Share dollar index. So I see here the beautiful consolidation. Nothing special happens here. Um, I see just the opposite for the British pound dollar. So we're just hit the low here, and right now we are pushing a little bit up, but this is just the range training for me.
Yeah.
Yeah.
Like,
This.
I mean, even if you look at the weekly time frame, if you look at the weekly time frame on the dollar index,
Yeah.
Yes.
do you see that there's a big drop, and then that inside candle that would worry me. You see, do you see that? It's a big drop, and then like it's just like it's put on some serious brakes, and it closed inside the previous candle's wick, lower wick.
Yes.
So, you know, and I don't know if you can. I mean, I suppose like let's just wait for today to get, you know, let's just get today out of the way. But yeah, I wouldn't be surprised if there's some sort of correction. But I mean, today I just feel like really uncertain about everything. I just want today out of the way, and then it's going to be like, okay, it's over. Now let's see how the market actually reacted to that.
I share your sentiment there. That's for sure.
Yes, but I see this. It's a correction. It should be not so extended like now. So I would like to see just to fall here at least to 101, maybe to 100. So it's a really, like I said, up and down. And I think that we should see some kind bigger rejection here. But I'm surprised how this US dollar index dropped in such a small time frame. So this is the January 13, and right now we are here in the March. So very fast. This pitchfork that they put, it's for whole last year. So this is the low high from the last year, and we play just in 2 months whole area. So it's really crazy.
Yeah. So don't you think because of that it could correct a little bit? I'm just feeling like everybody is like very confident about the dollar index dropping further. So it almost makes sense to prepare for the opposite to happen.
Yeah.
Of course.
Because it's
Contrarian
already
thinking, right?
Yeah, it's already dropped so much, as you said, in such a short period of time. So, but that formation there, if I see a formation like that, big drop with like a very small inside candle that closes in, I call that the TIS, trading into the shadow, and then the body closes inside the previous candle's wick. That's a bullish setup.
Yes, it can happen, of course, but like I said,
but it's not. I mean, it's not guaranteed, but I would just be cautious. That's all I'm saying for now.
Of course, I just need some fundamentally, just to hear something, because I know for the US dollar we need something, either the GDP, either inflation, either the interest rate, something to push dollar higher. But right now they're so pessimistic. So because of that, I see the dollar down yet. But we'll wait. Yes,
we will wait. Let's wait. Let's start.
We'll see tomorrow, hopefully.
So I just quickly want to show my chart and just. Well, there's not a lot going on. It's like I would have liked to get another opportunity, but don't think that's going to happen.
Will there be someone presenting from our side during that time today?
The third session. Yeah, the third session.
Yeah, I might tune in and have a look at what they're doing.
Oh, they're going to stand back and watch the fireworks with the popcorn. Yeah. So, right. Like, where are we right now? Yeah. This is the middle of nowhere. This is the middle of nowhere, and this is the middle of nowhere. This is a good example of when you're not even almost interested in placing a trade. So I showed you what it looks like when it's a good time or when it's not a good time. But yeah, sometimes like it doesn't necessarily have to break out of like a resistance area, or support level. Sometimes like just the candle formations itself. So I would like to get, say, at least 2 out of the 3 timeframes here to show it's moving in that direction. It's going up or down, as long as it doesn't. Say, for example, there's a bullish candle on the 15-minute and the half an hour, but just slightly above that, there's a resistance area. That's not good, because there's a resistance right above where you want to enter. But it doesn't need to necessarily break out of those levels. You just want to get 2 bullish candles out of the 3 time frames, and then the trigger time frame is obviously going to be consistent with what you see on the other 2, whichever time frames you see that. So what that means is that 3 out of the 4 time frames agrees with something. Okay, so 2 initially out of the 3. The third one is the trigger time frame. So you end up with 3 time frames out of the 4. That's the minimum. That tells you that one thing is likely to happen over another. Okay, so here you can see like this EMA is finding support, but I would not be interested because I can't really make sense of what's going on here. And I think like that's the move we caught right there. This is perfect. But just a breakout and the retest and then goes up there. But no, now I don't think there's going to be anything else. What's your charts look on crude oil, Richard? Anything happen?
It was a little bit of a bounce, but it's just running sideways.
Okay,
nothing to write home about, to be honest.
Well, what's up home about? It's 2025 now. Okay, well, I don't know. I can show. This is actually an indicator that I wanted to mention to people watching. If they struggle to draw these little channels, you can. There are indicators for these kind of things. Even like support resistance. If you struggle to draw the lines or you're not really sure, it's like or learning how to ride a bicycle. You put those little side wheels on just to find your balance. That's what there are many indicators out there that can help you to identify channels and so on. If you can't draw it yourself manually. But what is this? Oh, this is gold. Do any of you trade gold?
Sometimes.
Sometimes, yeah.
Okay, well, gold is breaking, but gold is doing really, really well, and that's obviously because, and that makes sense with the decline of the dollar over the last, I don't know how long. But it's not really nothing specific I wanted to tell you.
Gold has gone ballistic.
Yeah.
And when it does go ballistic like that, I still think we're in the last phase up for gold, or let's say very near to a top.
Yeah, I mean, if I look at this price action here, it also, I agree with you, it looks a bit extended. So maybe like a little pullback to maybe this high. Let me just get this channel lines is confusing me now. But this, you see that high there?
Yeah. Look,
So
at the very
that'll be-
least, I even think deeper than that. But over a long
Yeah.
period of time, because when gold starts correcting, I mean, it could take months.
Yeah, but it's been in a very strong bullish run this year. There's no doubt about that.
Yeah.
Okay, so Igor, do you have like any other forex pairs you're focusing on, or is it just mainly the New Zealand dollar because of the fact that you mentioned there's GDP numbers coming out later and the pound US dollar?
Okay, sometimes I just watch the news, and when something happens really crazy, for example, sometimes I'm ready to play exotic things, something that's nobody.
This
I would just give an example of that trade. I would just give example from the past. For example, when the war between the Ukraine and Russia started, for example, a lot of news about that. I concentrate and I watch Norwegian krona against the US dollar. So I know, because the Russia will be on the sanctions, and the biggest exporter of the oil in Europe is the Norway. I knew that they will be more richer than ever. So and that's happened. Norwegian krona started to going up and up and up, and I started to add a little bit positions, and later everything changed. But what I want to say, sometimes when I see some news interesting for some small country, I'm ready to go in some exotic currency pair or something like that. But it needs to be really hot, something, yes.
Yeah, like the exotics that do move, but the kind of challenge with them is the spread.
Yes,
Right.
yes. So it's only long term, only long
Yeah,
term.
longer term, because if you look at that spread on a you can't sculpt that.
No, you can't. You can definitely not. I mean, even another exotic is the South African rand. Okay, that's also an exotic, and that can also move really nicely. But it's so difficult to trade on the smaller time frames because of the spread. If they could just if it just had a smaller spread, it would be, oh my word, everybody will be all over it.
I quite like the dollar rand pair. Got used to the sort of the price structure and get a really good feel of where price might be going. But as you said, we'll probably have to have a bit of a longer term position or swing trade in there rather than day trading.
Yeah,
you just can't.
Yeah,
It's,
very difficult. I just are you guys familiar with this the Williams percentage R? I just want to
know about it. Not
so
sure
the Williams
how it's
percentage.
calculated.
It's basically you'll see that I've got two different ones here. I've got the 14 period and then the 210 period. This is basically okay, this is actually the wrong time frame. Let's have a look at the. Okay, it's a momentum indicator. I really like that because if I see, for example, the reason why it's 210 is because it's the 15-minute time frame. So it's the 15-minute time frame settings. So you just take 14, multiply by 15, and you get the 210.
Bitcoin now, yeah.
Yeah, so on the Bitcoin. So what I like to see is like if I see that price is hovering here around the -20 level, then so that means the momentum is really strong to the upside, and then I'm waiting for a little bit of weakness on the current time frame, and then so this is weakness, and then when it
Yeah.
crosses back up, it tells you the momentum is picking up on the smaller time frame, but it's still very high on the 15-minute time frame. So it gives you a really nice. I use this a lot. It works. It works really well. So I'm not sure if you look here as well. Here we are above the -20. I actually have the 210 at -30 setting and the -70. But anyway, so here you can see that it's above or it's around the -20 level. And now these little dips towards the -80 area gives you really nice retracements in a strong momentum. Strong momentum. But the momentum. Yeah, a lot of people trade Williams percentage R thinking it's overbought, oversold.
No.
So good luck. Selling. Yeah.
Yep.
Right. It's a momentum indicator. So it tells you the momentum is strong. It's not overbought. It's just the momentum is strong. And then you wait for weakness on the smaller time frames in momentum. And then when the momentum starts to pick up on the smaller time frames and the momentum is still strong on the longer time frame, so if it loses kind of power, then you need to be a bit cautious. But as long as it maintains that strength and you get this weakness and that push up, you can get some really, really good entries. So there's a little tip for you. If you are struggling to put together a strategy, this is very straightforward and it works really, really well. I have like one of the indicators I have. It's just a buy and sell indicator that's based on that. Is one of the elements. There are other elements as well. I look at things like ATR and so on. It's very, very accurate, and this is actually a big part of the ingredients. So that's William percentage R. It's a momentum indicator. Don't think it's overbought or oversold when it crosses a level. It tells you that there's momentum.
Where's Bitcoin trading now? 84 somewhere?
Yeah, 84. It will be interesting to speak to Paul because he's trading it. I don't know. Oh, look at all those things.
Paul is expert for Bitcoin.
Yeah, that's his baby. Be very interesting to hear his thoughts on.
Is he on later today?
Yeah, he's usually on the second section.
Yes. Well, I'll actually have a listen to that when I'm home.
Yes, I just want to share something, just from now, something. Just a moment, just to see how news can be really powerful for trading. Even we trade as Forex, it can be used like we trade stocks. I will just show you one thing for today, for example. So can you see the chart right now?
Not yet.
Okay.
There we go.
So what's happened today? Just
wow,
2 hours ago, the Ekrem İmamoğlu it's a Istanbul major, an Erdogan presidential rival. He is arrested, and he should be the main guy against the current Turkish president. And what's happened? I got just alert about that, and these trading setups are very good because there is no any fundamental or anything that should push this currency pair up or down. This is just the news, and it's a politic news that will nothing change, and it's very good. You wait, for example, 1 hour at least, just the price to go down, and then you just you need to go to a long trade to just recover that loss, and this is that gap actually, and that can be very good trade when you just trade the news that's a nonsense. And for example, in stocks market, there's so nonsense news that there's no. I would just give example. For example, it was the Nvidia. And there was a guy who has a DeepSeek platform, for example, and he just in one interview he said that he doesn't use any special cards on the special power for DeepSeek because he has a better algorithm. And in that moment, NVIDIA just went down, and it was like this. It was like this, and of course, after a couple hours, it went up, and it was the nonsense news because this is not the news about the stock. It's not the news about the market. Nothing. It's just an announcement. And the funniest thing was that OpenAI, they compete with DeepSeek, and they didn't know the secret of DeepSeek. And then that guy who launched the DeepSeek, he just said, guys, I created a research paper about this. It is the free publication on Google Scholar. You can go there and see what I did. So, and they just go there and see the top secret. It was the public ones. So I just want to give example of how that nonsense news are excellent trading setup. You find a stupid news, you wait till the price goes up, and you make a trade, because this kind of news it's just a pump and dump. There's no really something to push the market. I know when yes.
Well, can you what's the spread like on there? Like if you had to compare to the pound dollar.
I need to check that because I can see here maybe only in trading view. Can we see the spread somewhere?
You can see then a red and blue boxes there.
Yes. It's a 0.225.9 26.7.
Yeah. Sorry. So well, let me just get my pen out. So say again.
So that's 8.
It's like I said,
8 pips or what?
8 pips. 8 pips. It's 8 pips.
It's not too bad. I mean, it depends on the ATR. What's the ATR?
If you go to, let's say, a 5-minute time frame there, Igor, I want to see how quick that's a 1 hour. Yeah.
It's 1 hour.
See how fast that actually happened. You see.
Yes. So it's not super special. Maybe this trading is not super special because this large spread. But sometimes when I see the stupid news, I want to try that because either in currency space, there are a lot of nonsense. It's really nonsense that
nonsense
reacts.
Yeah, that's very interesting. I mean, the only exotic currency I've traded, as I've said to you, is the dollar South African rand, and that when it moves, it does move, and that's pretty great. Who's this now? Oh, sorry, another sales call. I haven't followed up, Richard. I haven't followed up on it. Oh my God!
Make sure it's not the police, Jannie.
The same time.
This is a phone call from Durban.
They will actually be after Igor, not you, Jannie.
Yeah, they're going to say we hear you have connections. We hear you have connections with Igor. Is that right? Yeah, no. But Igor, where are you based? What time is it where you are?
It's
too many questions. Sorry, man.
I'm the Berlin time, Berlin Belgrade, because I'm from Serbia.
Okay. Yeah, because where we are is now it's nearly 4:45. So the market opens. It depends on the time of the year because they change the clocks. But the market the market opens for us at 3:30, and then other times of the year is like 4:30.
Yeah.
So yeah, it's not.
It's actually nicer for me now this time. Being a bit.
Yeah, I also prefer the 3:30 one. But
Yes.
one day America will kind of grow up and stick to 1 clock.
Maybe.
Hopefully this one. This is the good one.
Yes.
But anyway,
let's first see what they do with the interest rates later.
Yeah, let's see what happens. I'm really curious to see what's going to happen. Your predictions, Richard? Do you think how the market's going to react? Do you think it's going to be bullish or bearish news for the indices, for the US indices?
I think they're going to keep the interest rates unchanged. I still think potentially that June sort of time frame that they might reduce it a bit more. Maybe need a bit more data before they actually reduce it. Don't think they'll increase the interest rates, but keeping it same will just probably maintain that uncertainty in the markets and the indices. I'm still looking for another move lower in the ES and the NASDAQ, but I don't think it's going to be a massive move. I just think it's going to be a pip of this recent low that we've seen, just to get everyone a bit more afraid and then see a bounce back up again.
Okay.
Whether that's going to be corrective, but I think just a bigger sort of move to the upside, but I'm not sure we're there yet. That's my opinion.
Fully agree with you. Well, that's interesting. Let's have a look, and we'll just have to wait to see what happens. So,
yeah.
All right, guys. Thank you. It was great talking to you again, man. I hope we can do more sessions together. It's really interesting. So,
absolutely.
Have a
good one, guys.
Have a good one.
I wish you a great day today.
Yes,
Cheers,
likewise. Enjoy. Cheers.
Thanks.
Bye.
Have a good one. Bye-bye.
Bye.
Hey.
Hello, Michael.
What's up, Paul? How are you?
I am good. Delighted to see you again so soon.
Right. They got us on good now.
Yeah, we must have either done something wrong yesterday or something right.
Yeah, it looks like my camera's giving me some issues here. Let me try to switch over to the other one.
Yeah.
Perfect. Yes, it is. All right. Sorry about
There
that.
we go.
All right. Now we're in here.
Rightio. Okay.
How's you? How's everything going today? What's it looking like in those crypto markets?
Well, better. A little better. A little better. I was just catching up on some of the news before I signed on, just trying to get a sense of, because obviously we've got the FOMC meeting in progress today. So I think we know what's going to, there's probably going to be a couple of interest rate cuts, in a bit, maybe, but it's just wait and see if the craziness continues. So I can pretty much guess they're going to say that, if not already.
Yeah.
But there was just a couple of things which so there's been a lot of the problems in crypto over the last few years have been various issues with lawsuits from the SEC, and some legitimate, FTX, all that kind of stuff. Others just seem arbitrary. Now, obviously, those are not particularly helpful for crypto, and like the XRP has been under the thumb for quite some time now. And
yes,
I always found it a bit strange because back in the day, I always thought I don't see XRP or Ripple in the same way as a lot of commentators do, which they because they talk about it like going to $100, and they'll prove me wrong, but when you do the math, when you're trying to figure out what would the market cap have to get to in order for it to be $100, so I'm not like super bullish on XRP as a thing, but back in the day, Santander released a international money moving app called FX, and it was run on the blockchain with Ripple, right? And it was the first kind of use case in financial services, and it was fantastic. It was like this, no charges, no fees.
Love it.
They cancelled it, but they cancelled it as a result of the SEC lawsuit, and that has now just been dropped completely. They've said they're not going to file for appeal. So if you're looking for a news pump, XRP, maybe, right?
Hey, I'm glad you said that. Funny enough, I mean, obviously I trade currencies and indices, so I'm not super bullish on cryptos, but that is number one in my portfolio, like number one, right? Because use case wise that you were just mentioning, can totally see that happening, right? Like totally. If there was ever this is obvious, XRP/Ripple would be the exact this is obvious type of move, right? Because again, I think there's basically was going to replace in ACH, the automatic clearinghouse, which has been around for probably older than you and I put together.
Yeah, they still sign their checks there,
Yeah. So I totally think that can, definitely become something. And I mean, with technology nowadays, right? Like, why would it take 2 to 3 days ACH for something to get here when we have, the accessibility to be able to get this to you immediately?
It's still a huge. I mean, I have some US accounts, right? It's not. I mean, in the UK, Europe, it's all right. But in the US, I've got a Wells Fargo account, and like so limiting and so slow and charges, and I'm like, why am I using this?
Yeah, it's ridiculous. It's ridiculous. I can't even lie. Like, obviously, I'm here in Mexico, so I still have my US accounts and I transfer money in essence. But sometimes I'm like, this takes 3 days to get here. I'm like, why is this still pending? Like, this is ridiculous. Had this been crypto, I would have had it 2 days ago. You know what I mean? So I'm all for it. And I think I'm biased. I think you and I had that conversation that one day. We had the podcast together with Sammy, and I was mentioning that I was one of those guys who actually took Ripple initially from, I think it was 32 cents up to $3, right?
Yeah.
That was my biggest first big crypto move that I actually took advantage of, and it worked out perfect. So I have love for my heart in Ripple XRP.
Well, I mean, I look at it like, I mean, it's, I was in XRP the last bull run, right? I was in we can talk a little bit more about altcoins because there's some big news coming from Ola Prime soon. So that's all I'll say. So we can talk a bit more of these things now. So I was in BNB, Binance Token, Ethereum, Bitcoin, and XRP, and XRP 10x, right? Great. But BNB 50x.
Right.
As so Ethereum kind of put in the same sort of gains as no, I got more from Ethereum. That was 40x or something. But XRP didn't. It was great gains, but I need to do a bit more research into it because it's interesting. Use case is so important. Like there's a token called Render, RNDR, and it's one of the hot ones along with FET and other tokens like that. Which again, next week, big things from Ola Prime, I think. And it's got a use case because it's essentially you use the blockchain. So say you're a video editor or you're in Hollywood and you're doing special effects, and you've got the cost associated with rendering, right, is ultimately Octane renders and just getting audio, Planet of the Apes, right? How much render time would that take, right? But now you can buy tokens and then put essentially like you it's peer-to-peer essentially. So you go on the render network, it will then do the processing for you using other computers on the network so much quicker, and it's revolutionizing the visual effects industry. And in the context of AI, that's huge. So XRP has a use case in financial services for sure. This is what you want to look for. Whatever you're doing has a use case. Like obviously buy the dollar over the Venezuelan bolivar, of course, because it's right? But it's just the last bit of news which I saw was President Trump's executive director says we want as much Bitcoin as we can get. And that just reminded me of like somebody getting into crypto for the first time. I want as much Bitcoin as I can get. And I'm like, are you going to buy it? Yeah. I mean, are you going to buy it when it's 250K, or are you going to wait till the end of the bull cycle? And that's what we want to know, right? It's like we're in government, like we want details, strategy. So
for sure.
Interesting times. What's happening with your market?
Oh man, I definitely think it's this news is happening at 2:00 because I was dead today. I was straight cash. I didn't make one move today. Everything was kind of flattening out. You can tell everyone's just on pins and needles, just kind of waiting to see what's really going to happen. I didn't take any trades today, like zero. I don't even see anything that's close. A lot of it is kind of ranging. Let me actually pull up my screen here now.
Yeah, let's look.
Even in my first set here, I'm like, this looks crazy, right? I'm super privy to the news, so obviously I knew that this was happening too. But man, this is what we always mean, right, Paul? When you can't just jump right into the charts. I mean, to the news. Like you gotta like really figure out, like, hey, is there news coming up? Is there some significant event? Is there a catalyst? Like, what's really going on? All right. Yeah. And this is exactly what I mean when I say, oh, you can't trade this, right? Like, look at EuroCAD. Look at this. Yeah. Look at the stillness here, right? Yeah, and this is actually zoomed in. This is actually what it really looks like, right? Everyone's waiting for this interest rate announcement here, right? Shortly, I think it's at shortly after we get off, rather. So this is hideous, right? This is the range here is just. This almost gives me the heebie-jeebies as a trader. Like, get it away from me. This is ugly. This is so ugly that it's ridiculous.
It's absent of any positive signals.
There's nothing here. There's literally nothing here, right? That's just EuroCAD. Euro NZD is slightly little bit better, right? Maybe. There's a few things that, again, as I always mention, few things you kind of want to be aware of with this, right? Once you got this 5,200 cross here, guys, you are looking for an M structure off this 200, and simultaneously how you see this market baseline just screaming upwards. Don't think that's going to stop. This has to continue above this line and then come down like that, all right? And we're looking for M structures off of this to go short back to the 800, right? So nothing there. This is ugly too, right? This is not as bad as Euro CAD, but ugly, right? I think EA was one of them too. Let's see. I want to go to. Oh, remember this one from yesterday? I took this yesterday.
Yeah.
Right. Yeah. Same thing. This thing just kind of staled on out, and I'm glad this is exactly what I mean when I say, well, we took this on the 15-minute, so keep that in mind. But this is exactly what I mean when I say once price closes below that 13 EMA, you got to get out of that bad boy. It's not going to go the way you think it is, right? Yeah. We entered this trade yesterday. Whoops. Man, okay, here we go. Here. And we just change this to green. Let us know we took longs and not shorts, right? This thing didn't do anything. We got some slight movement, messed around. As I always mention, I always close my trades at 355. Once this actually closed, remember we were looking for this to close above. For me, it took way too long, right? Let me just kind of zoom in here. This took way too long for this to actually make a movement. We got, after we entered, we got 1, 2, 3, 4, 5, 6, 7. 2 hours later, this thing's just now closing above, right? So at this particular point, yeah, I'm not too into this trade anymore at all. It's very late. I closed this with I think +3, so basically break even for me. And look what happens. Closes below, I would have definitely closed the trade by then. Asia comes along. So even if you played Asia and held it, you almost would have got stopped out here. And depending on I'm drawing a blank here. Depending on the actual range from that point to this one and the spread, you might have got taken out, right? Yeah. And if you didn't get taken out then, you definitely got taken out with this one, right? Just hideous. Hideous. On a larger time frame, as you can see on the 1 hour chart, right? Still not super clear, but just kind of ranging in this little area. And then all of a sudden, boom. Best believe they took everyone out who was long here with this one candle. They got everybody in a 1 hour time frame with this one candle.
Yeah, right? It's that question, isn't it? It's like, because when we sometimes traders will put blinkers on because they'll have their system, they'll have their trade, and they'll be like, okay, I've just got to wait. And they ignore what's in front of them, which is like some serious questions like, why are we not bouncing stronger here? Like, what's happening? Exactly. And then identifying that, you know what, I've had my starter signal, but this is looking weak. But we all do it. But it's easy to say after the fact.
Yeah. And I'll be honest, and I feel like a lot of times I'm beating a dead horse with these things, right? Because I know for a fact that if my move doesn't happen within a 2 hour time frame, something's going on, right? I have a hard 2 hour rule, right? Just want to put this on the chart. Hard 2 hour rule, right? That basically means, in majority of my trades, I'm at break even in the first 30 minutes, hour, maybe hour and a half, but definitely at 2 hours, right? If I'm not at break even in 2 hours, this trade has changed, right? Like there's something that I'm not seeing. Maybe the money has moved. There's something that's going on. I don't really like to hold trades longer than 2 hours. I want to be at break even, or I'm going to go ahead and close that trade out at the 2 hour mark, because it's just not working out the way I thought it is. And once again, this is one of those rules that's hard rule for a reason, because I've seen this happen way too many times, right? Yeah. My trade zealot tells me that, hey, your average holding time is an hour, hour and a half. Once I get to that 2 hour mark, that's when I can kind of see my numbers start to skew, and it's just not good, right? I mentioned this yesterday, actually. I said I want this to close above. Once it closes above, we should be at break even pretty quickly after that, and it never happened. And for me, that's why, because even though they had traders trapped here, right, with the W that we mentioned, with the W formation that we mentioned yesterday, right, we got this little W breakout. We're expecting a bounce, right, and going long here. When this doesn't happen after a certain time frame, it isn't a you wait out and just hang around and kind of see what's going to happen. You got to get out of the trade, guys. This is the epitome of cutting your losers quick and letting your winners run, right? Like 2 hours. For me, I'm not trying to be in here at all. I'm a day trader. I'm not a swing trader. I'm not an investor into these currency markets, right? I'm a day trader. I'm in and out. The shorter I can be in the trade, the better for me. Like I don't want to be here long at all. So every moment that you're in the markets is risk. It's like you're trading options. You got that decay there, right? Like you kind of want to make sure you're positioned properly, and don't ever be afraid to change your bias. It's totally fine. I love to trade at first, and when it didn't go in my time frame, I don't love it anymore. And just look at this. This is so ugly after we jumped into the trade. Right?
I got asked a question today about how do you? I think we've had some people have been asking this question on other streams last week, and it was how do you remain nimble, right, to make these adjustments, to assess that the market is doing, and then make changes without flailing in the wind. And I think I got asked that today by a student as well, and it's like you have to plan for all eventualities, and then if you have done that, right, if you see this, right, you've got to what if there's a trend change, where's my line in the sand to then draw a line and get out, right? And you just got to look at all the eventualities and have a plan. So when you do get up in the middle of the night, this is what we do in crypto, unfortunately, when you get up in the middle of the night because you've had an alert, because the thing didn't do it at 8 p.m. like you wanted it to, right? It does it in the middle of the night. And you get up and you're like, you can't make sense of it. But when you've got a plan, like if it breaks past this moving average and we get a close on this time frame, exit your position, right? And then you follow it. And it's just the absence of considering these things then leads to chaos when the unexpected happens. So
exactly. That's exactly right. That's very, very well said, Paul. Right? Like a question like that is like, you can almost tell that type of question, you don't have a plan before you get into this. There is no fly by the seat of your pants. There is no there's not much nimble room there. It's a plan that I'm sticking to that I've already curated and developed before I decide to even do this. And I'm just sticking to the plan. Right. Yeah. To the blind driver, let's say you just get on a bus, a school bus, whatever the case may be, a collectivo, whatever the case may be. You think this guy's just riding around picking up people, and he's not. He has a route that he's running.
What an example.
Right? The train doesn't randomly go on tracks, guys. Right? It's a schedule that it's keeping.
Yeah.
Right. So just knowing that extra insight is definitely, a key piece to say there's not much nimbleness there. The only nimbleness that I have and flexibility that I have in my process is if I'm going to take off a quarter or a half. That's really it.
Yeah.
Right. If the candles are huge and I'm like, this is going pretty fast, I might take off a quarter at that point because I believe confidently that this is going to keep going. But if not, I'm going to go ahead and take off a quarter. You know what I mean? Because, the other way around, rather, because the candles are too small.
It works both ways too, because, you've got to certainly in crypto, when there's tremendous volatility and, it rarely goes from A to B in a straight line. And if you are indecisive, you can also risk your profit potential, because if you're not sure of what your plan isn't thoroughly thought out, and then you see perhaps a bearish signal, just one signal, and then it freaks you out, then you abandon your trade, and then you see it go up another 20%. And so there's a difference between panicking and running than just having a plan which says, you know what, I'm gonna set an exit point exactly where I got in, just to make sure I protect my capital. I'm gonna let it play out because that's my plan. But it works both ways, and I mean we all do it. I mean I'm not saying I'm immune to it. It still happens, right?
Right, for sure, for sure. I think also, just to kind of add to that point, right? It just comes down to, I mean, not just having a plan, but the data behind it, right? Like, and I always like to use traffic as in this scenario, right? There are certain routes that someone may take to or from work because they know there's not much traffic this way, right?
Yeah,
that's something that you deduce from experience. You probably got caught up in the wrong side of that traffic so many times on the expressway, and you're like, you know what? I'm gonna go another route, and that route got you to work 10 minutes faster, whatever the case may be. You want to have that same idea with trading, right? Like, this isn't the best route to go based on my experiences, and the other routes is. So you kind of want to just be nimble in that aspect, but at the same time, you gotta have a plan. Like, I know I'm going to work or I'm going home, right?
Yeah, and it's like that 2-hour thing you said. I mean, just for people paying attention. So when you were originally conceiving of your, and you know, over time, we looked at your strategy in granular detail yesterday. Like, at what point in the planning process, how many years, months was it when you put that 2-hour rule in place, right? I mean, that's the question.
Man, yeah. So that literally, out of these 11 years that I'd say I've been trying and failing, right? That didn't get put into place until, man, let's say 3 years ago, right?
Yeah.
Like, hard 3 years ago, 2-hour rule. Like, you know what I've noticed throughout my data is, man, a lot of the times that I'm winning my trades, I'm at break even pretty quickly, or my holding time isn't that long. But the trades that I'm losing, I'm holding for 3, 4, all day, and I'm losing on them. I'm like, let's kind of nail down on that area of like, all right, what's a good, maybe 1 hour is too short and 3 hours too long, right? So there's a lot of, it's too hot, it's too cold, things going on there. But you eventually find right in the middle. This is my baby bear, where it's not too hot, it's not too cold, 2-hour rule. This is what I'm sticking to right here. Right. Yeah. So definitely took some time to understand, but things can change. Like 2 hours, as a day trader in the market, even for a scalper, right? Scalpers are in and out pretty quickly. Imagine a scalper holding a trade for 2 hours. That's insane to them, right? Yeah. At some point, you will develop a keen sense of knowing, all right, I'm not wrong here just yet. I'm going to either move my stop to break even to take my risk off the table, because that's rule number 1, is managing that risk. Or 2, you know what? I don't like this anymore, right? We've all had that date. Maybe that girl, that guy were like, oh, initially it starts out great. Like, they do something too much. You're like, you know what? I don't like this person as much as I thought.
I'm probably that guy. I'm on the other side of it.
Right.
Did you hear that bell just go off a few minutes ago? Right, I just got an alert on TradingView, and I've just, so basically, I was in the last crash we had from crypto, right? Wasn't paying attention, right? It's a very small leverage position, right? Just 2x3, I think, something like that, right? It was in an FXS, whatever. And I wasn't paying attention to it, and it just happened during a crash. And I just like, you know what, I ain't got time to deal with this. So it just tanked, completely tanked. And I've been waiting weeks for it to, I mean, I planned it all. So my liquidation point was like in hell, right? So there's no way it's going there, right? But I was like, I've been waiting months just for it to get out, just to free up that small amount of capital. And it's just done it right now. So I'm feeling fantastic. Again, terrible trading practice from me with this trade. Awful, terrible trading practice. But it's just got out. So I'm feeling really good again. I feel like I'm back in the game.
Yes. Gotta love it. Gotta love it. Gotta love it. That's how it happens sometimes, right? Like, we gotta free up that small amount of capital sometimes.
So should we have a look at Bitcoin and just take it slow and see what's going down?
Yeah, let's do it. Let's check it out. I'm pretty much dead over here. After you do that, I'll show something that I was looking at today, but not too privy on. And then we can kind of
I got lots of scrappy bits today, so we can just go back and forward. So
sweet.
So can you see this okay?
Yeah, it's perfect.
Okay, so oops, I didn't mean to do that. That's crazy. Okay, right. So this was the chart we were looking at yesterday. This is Bitcoin 4 hour, and we were saying how this is the buy zone, right? As long as we're in this pattern, and we've kind of eked out above this pattern now. We've kind of just popped our head out right into this order block, which is still against the MA, but this chart now isn't helpful. So new chart today. This is Bitcoin 30-minute. And this is the game, people, right? When you're doing whatever you're doing, especially with crypto, you've got to have multiple perspectives every day to help you trade. Because this chart is not useful for me right now, because it was only useful when it was in the pattern, and now it's breaking out. I need something else. So this is the 30-minute. This is just the zooming in of just this price action here. And as you can see, we're right up against the moving average again. It's not here because it's lagging, of course. You've got to wait a day. And we're bang up against this level again. And I've reversed the fib levels because the retracement seems to maybe be stopping. So we've got the 0.5 to deal with. So Bitcoin trading opportunity. Now we're just waiting to see if we get a breakout. Now you'll notice I've put this line here just as a line in the sand, just to see if, just for me to just see, like, if this breaks down, then we're probably going lower. But we're looking for a breakout back into this range, right? This is what we want right now. Otherwise, we'll reset and we'll head back down again. But we've got, a higher low, so there's a bit of momentum. However, when you're looking at charts, people, right, there's many things that you'll always miss. And for me, multiple perspectives allows me to not miss a trick. So this is a line which I've noticed after the fact, a diagonal line, which is kind of the ascending triangle we've been looking at previously. And if we look at it, it's a bit there it is. There's the line. Now we've got a different perspective. Okay, we've got a potential bearish pattern here. And we're a bit trapped. So we might just be ranging here. So there's two alternatives now. Right now, bearing in mind, if you break to the upside out of a rising pattern like this, which typically has probabilities to go to the downside, it will go parabolic traditionally because it's such a bullish signal to go against the probabilities. So it's about 70 to 80% probability of a rising channel or wedge will go to the downside. This is only the 30-minute chart, so it's no big deal. But these are your two options. If you get a break, then this is the range to trade, right? So it could be a short move to here, or if you get a double top, then maybe a short move from there, which would be better. That's something to trade. And then if it doesn't break out and it does break back in and up here, then we've just turn the 1 day 200 MA into support, as well as this, and then that would be potentially a long trade just to the next range, the 618. So those are two simple options for people to potentially trade with at the moment. But it's a mixed signal, just like your stuff. It's a little bit, we've got something to trade, but it's not fantastic. But those are Bitcoin. Any thoughts on that?
It's so funny, like, right? Because we always get to this point where it's like, that's exactly what I would say, like literally. But that's a professional standpoint, because there is no, this is happening, I'm sure of it, just watch for this. That doesn't exist. And anyone who says that, I would question their authority just a bit, to be honest. I'm more interested in the if-then scenario that you just created, right? If you can kind of picture what I always mention, the M at the top, the break, and the retest going short, this is the retest going short. This is the exact same thing, minus the EMAs, right? Because it's purely price action, support and resistance levels. That would be a great opportunity to short if we saw some entry signals to go ahead and go short, right?
Yeah.
On the contrary, going long, if you were to break above that point, right? Break above that area and pull back, and pull back and retest that area, going long. That would be my bias on that exact thing. But you got to sit back and wait. You can't jump in and say, "Oh, it's doing this, it's doing that." No, that's the amateur trader speaking, right? You gotta wait to see what's gonna happen first. You can't just prematurely jump in, right?
Yeah,
so I agree with your bias 100%.
Yeah, I mean, this is when I say basic, it means there's more work to be done because obviously we're struggling a little bit, and obviously we're eating away at sellers every time we touch this line, and it's coming back. The drawdown, from this. If you look at this as a triangle pattern and the measured move from it, it's not much of a drawdown after it, which is quite bullish. That's great. But if you're looking for a breakout and you're looking to buy the retest, you want to see some strong volume. So, this is this sort of volume or this sort of volume here, right? If you break out and you've got volume like we've got at the moment, I'm not necessarily taking that trade. What we really want to see is like strong volume right up to the 618, really strong move, and then back down, and then because there's no hesitation there. It's like, okay, we're up, we're above now, let's go, right? It's the soldiers jumping onto the beach, let's run, right? Right. And so there's obviously nuance, and the reason why, even though this is a great place to short right here, because we're still in a pattern, so therefore I wouldn't short it here. So my solution to the problem of I can't short inside this pattern because it's just, if it breaks up. So what I would say is, ideally I would want this, right? And then down, because then you're out of the pattern. You've had a bearish signal. The sellers are paying attention and the buyers are giving up. And then you get you get the opportunity at the same level, but on the other side of the pattern where there's no bullish context. And then you enter. And again, volume. See if you can get some volume like here, then that would be good. But yeah, I mean that's how I approach it.
For sure. I'll just add to that really quick. One of those huge traders over at S&B, I believe they do. Lance Brightstein. He's huge. I mean, 8-figure trader a year type of trader, and he talks about this concept of the right side of the V, right? So kind of what you just mentioned a little bit. It's almost two opportunities to get in. If you get in too early, you might be right, but you got to experience that drawdown, right? So you want to let that pass you, and then that retest, and then you get in at that same level. That's the right side of the V, or M or W. It's pretty much the same concept, but you want to be on the right side of that point in essence, because otherwise, if you're on the opposite side, you might experience some drawdown there, and sometimes there's no telling how far that will go down or up.
Yeah. Well, that's me. I can do money flow after this, but let's switch back to you for a little bit if that works.
Yeah. So I'll actually want to elaborate further on that concept in general, right? Because I think it's super important, and that's more or less why I actually wait for a actual W or M pattern. I don't want to just take let me take this off here. I don't want to just take the first one. Let me have this too, right? Because it's almost like, let's say you do this, right? If I'm looking for this pattern, right, and we do this in the retest, let's just kind of stop it there. Some traders would beg to differ or say, hey, it's going down. This is the first opportunity. Well, we can't just short it from here. That's actually, I see why you would say that, but that's the wrong side. This is the wrong side of what I call the M or the W, right? This is wrong. You don't want to be on the first one. This just creates this outside structure, right? What I'm looking for is an actual retest of that same area and failing to break through it, right? So this is actually, and I'm not going to say this is right because I don't go for this trade, right? So I'll say this is my first sign, right? This is my first sign that, okay, this might be a good short opportunity, right? Because it retested this area and it couldn't break higher. Yeah. Once I get a break below this area here, whoops, I don't know why they did that. All right, let me try that again. Once I get a break below this area, and I'll just make this red. I like to keep everything visual, right? once I get a break below this area right here, right now, this is my, oh, get ready.
Yeah.
Right. Get ready for this. Right. So now again, someone could say, well, why you don't take it here? That's not right. You can't take this here because this could continuously, let's say, do something like this and just continue to trend higher, right? You can't take that there either. That could keep going, right? What you're looking for is this break below. This clearly is below, and you want this to run a little bit further and then retest that area. Yeah. This right here is the money spot. Exactly. Always has been, always will be. And one thing that is accurate, this isn't just a my strategy thing. This is across the board, right?
Yeah. Basic TA.
Yeah, this amongst other things, this is the money spot right here. When you grab this area right here, right? Most important of all. Anything else, first leg, there's no real confirmation with this point here that's wrong. This is better confirmation, but again, this could go the other way. Your full confirmation once this breaks below and retests this area in this pattern, right? For me, I'm just speaking of for me, right?
No, but I mean, when you enter where you've labeled wrong, you are taking all of the risk for the entire market, right?
Yes.
The first sign, you're still taking significant risk. You've got improved probabilities that you'll at least have a move down to the neckline. Fine. But when you buy the retest, other buyers or sellers in this case are entering with you, right? And that's how you get probabilities in your favor. Doesn't always happen, but if you're entering, I mean, the pattern has to form. So some kamikaze traders have to try and sell that. I mean, otherwise we wouldn't have a pattern. So thank you to those people. But I would never do that. It's so because when you've got that first upswing peak, right? The momentum behind it, right? You may think that we're at resistance, right? And it's strong resistance, but and it probably would pop its head up and come back down. But it's still when you push something down a hill, it takes a while to stop, right?
Yeah.
And people who don't know any better will be buying underneath resistance and they'll be pushing it up thinking it's going to the moon, and they will wreck you. So therefore you've got to get them off the table, get them out of the way, get them wrecked. And then the first sign is your first potential opportunity. I mean, maybe to scale in, but the retest is it's so much more manageable, because even if it goes the other way, right, you can get out easy, right? Because it has to then retest.
I'll bet to add this, right? If you were to take this, where would your stop be at? You don't have a real stop loss. Like this could be all the way up here. You're looking so far left to kind of see what happened 2 weeks ago, or you have no real level to put your stop loss, right? Like you just can't tell in essence, or it's just too far back. With taking the retest, now you have a definite place as to where to put your stop loss, right? Let's say you took this here. I know the stop goes above the last swing point, 2-3 pips, give or take, right? That's what we kind of want to put it at. And you can kind of measure this next move. This is pretty much at least going to the most recent swing, right? This is a nice little 1-for-1 here. This is nice. Yeah. This is nice. And this is where you want to be at in the structure. Now, of course, this isn't going to play out every time. This is not how it works. But the math is in your favor if you were to play it like this. Yeah. Nice entry, high probability setup, breaker structure, retest. Your stops is above the most 2 recent swing points, right? So if they move, I always say if they come back here and stop me out here, they can have it. They got that one. Like, great job, guys.
Yeah, play.
Yeah, great job. That I'm happy to take that stop out, right? But what I can't take out, I can't take a stop at the wrong or the first sign, because that's just not enough for me. It's just not enough. In this small example, wrong, first test, get ready. That's 3 major things that's happening, right?
Yeah.
And let's just say if this needs to be 1 for 1 for me. If this were shorter, let's take this off and let's just say the swing was here, right? And this ended up being a 0.76. That's not good enough for me. Now I need a decent pullback, right? To be able to pull this down. Whoop, this is actually going the other way. So I need a decent pullback at this point, right? For me to really want to take this. So we're talking about somewhere around here now, right?
Yeah.
So it's just the whole, again, that if-then scenario. There's plenty of trades where it's close and it just doesn't really measure up for me, and it's still a pass. Like,
Yeah, I mean, that's a fantastic example of what we're talking about. And it's, for me, it's always about, like, I trade off signals, and if up in that where it's wrong and the first sign, you're in there's a bullish context still, right? You haven't got your bearish signal, so it's just gambling. It just is. And obviously there's things you can look at. You can look at open interest, if you know, and you can, for different assets, and you can get an insight into, you know, and is it, you know, where's the sell orders, and you can do that, but it's still, you're ignoring the basic fundamentals, which which eventually will get you if you don't look at them. So that's great. Everyone pay attention.
Yes, this is it. And I'm not a bragger or anything by a stretch of imagination, but when you understand this concept, you got the psychology behind it, you're journaling your trades. This is it. I mean, this is everything. This will take you to where you're trying to get to, for one. And two, it took me a long time to really not just notice where I was, but to have all of the key pieces to make this work. So, you know how you always say, man, what would I tell my younger self? I think us as traders, you know, we have this burning desire to want to tell new and beginner and developing traders that, hey, don't do this. Live vicariously through me. I promise you this is how it works, right? Like, I just wish everyone understood this, because even if you understood this, if you don't believe it and your psychology isn't right, you can still find yourself jumping in at that first sign, right? It's like, you know what? No, I'm gonna get a better entry. I'm gonna take my stop right here, my entry here, put my stop here, and I'm gonna have a 3 for 4 trade. And then you get stopped out a few times. You're like, man, what's going on? It's because that's not how it works, guys. Like, right? Like this.
I mean, just going back to what you said about speaking to your younger self. I mean, I would just tell myself to buy Bitcoin. I mean, right?
Yeah, right.
2010. I'm like, let's go. But when I did a masterclass a while back, and I think we'll probably get it out around here at some point, on just reversal patterns, continuation patterns, and I included a discussion on the basic psychology of how the patterns work, because they, as you said, if you understand the psychology behind it, then you're less likely to ignore the pattern, and you're going to let it play out because you understand the benefits of it. So it's very, very important to do a bit of research into that and figure out why is it happening? What are the sellers thinking? What are the buyers seeing? Why is it getting exhausted? What's happening? And then when you understand it, you know, how like an inverse head and shoulders works or something, and then it just makes sense. And then you just follow it, because why go against it, right?
Exactly. And it's just, not to say it's common sense, but right, we can correlate this same topic to a lot of things, right? Let's just say betting, right? I don't know, on sports games. If team A plays team B 10 times and team A wins 8 out of the 10 times, the 11th time, do you think that team A is going to win or team B is going to win? Yeah. I mean, logically speaking, you have an 80% chance of team A winning, right? Why would you ever bet on team B? I don't.
You're like an underdog.
Yeah. and the only traders who do that, or bettors rather, who do that, is those Hail Mary people, right? Like, oh, the odds are in my favor. I don't want to bet on team A because I only win 2x, right? Even though I got an 80% chance of winning. Oh, if I bet on team B, it's a 8x, but it's only a 20% chance of winning. That's the wrong way of thinking about it, right? Like you shouldn't think of it that way. You have a 80% chance of losing. Just think of it that way. Who wants to that deal doesn't even make sense. It just doesn't.
But
right?
so many people do it. I mean, speaking of the context of betting, right, and how betting's like so out of control with phone apps and stuff now. I mean, people will just like they'll bet their life savings on, well, if this basketball player has this specific point and he's wearing this specific trainer and he bumps into this specific person at this specific time, I'm convinced that's going to happen. And it's of course it doesn't happen. Of course it doesn't.
Right. Makes no sense. Like it literally makes no sense. And I mean, I don't know. This is maybe the Capricorn super biased person in me. Like I'm super analytical with stuff, but I'm just all into betting in my favor, right? Like just always. So I'm going to pull up another one here, right? So I'm actually looking at my other screen. I was looking at, so I don't like to take these trades. I did point these out to my group, but I don't like to take these trades because they don't work out well, right? Now, how I always mention my 5 setups, right? 1, master trade. 2, combo trade. 3, ID 50. Right, 4, MW off 200, and then 5 is my money trade, right? So just to give even further context, I show this up all the time, but I have these labeled, right? So this is my A trade. This is an A trade. And I write these out in order for a reason because in my mind, this is how they go. B trade and my C trade, right? On my C trades, I'm only, what just happened there? On my, not sure why that happened. All right, anyway, on my A trades, I'm risking, right? I have to put my full 1% on my A trades. That's just my thing. I have to put them on there. I make jokes and say it's illegal if I don't put full 1% on those trades, right?
Well, what happens
now? Maybe if
you don't put 1% on,
it's illegal. I have to tell myself that I didn't follow my process the entire way.
I mean, is there like a trading police?
Yes. It's like the trading guys rain down upon me and say, "No, you made a mistake. That's not how you do it." Right? Like that's not top tier performance. That's the epitome of Steph Curry having a wide open 3 and he passes the ball to me. Like, what are you doing? You have a super high probability of making that. Just shoot the ball, right? Take the trade. So for me, I have to take that, right? I don't care if I lose or win it. Of course, I want to win it, but I have to, no matter what, put my full position on my A+ setup, right? But from here, now I can get into slightly discretionary, right? So I can do 0.5 to 0.75, right? And then scooting on down here, same exact thing, right? 0.5 to 0.75, right? Now here, my C trade, which again is a C trade, so you still pass the test to be able to take the trade, but I'm not putting my full position on this at all. So from here, I'm doing 0.25 to 0.50, right? So this is just my rule of thumb. This is how I go about doing it and how it needs to look, right? So on top of, right, now let's kind of point this out here. So for me, NAS 100 is already really low, right? So I don't know why I would even be thinking about shorting back into this, except for the fact that I have a nice pattern here. I got my 5200 cross, right? This is my first signal. Once I see 5200 cross, I'm looking for M's or W's, right? So I got the 5200 cross. 5200 cross. And I'll just put basically what I'm looking for. M or W, off 200. right? So this is the first thing I'm looking for. This second one, this just gives me further confirmation that, oh, we're definitely short. This is just the second full confirmation. Right? Hope I'm spelling right today. I think I am. All right. So the next thing I'm looking for, as I said, I'm looking for this move off the 200 EMA, right? So when I say that, the white one is the 200. Notice that once the 5200 cross, I don't have price touch this 200 EMA at all until right here, right? So that's the very first thing I'm looking for, right? Now, once I get to this point, I'm looking for some type of, let me scoot this down here a little bit. I'm looking for some type of M structure, really, right? Like off of this EMA, which I'm looking for two things, really, but we got this little head or shoulder, head, funny looking pattern type thing, right? That's really what I'm seeing. The next move would be, so that's the M, or it's an ugly M, but it's a M. I'm not interested in that though. I'm looking for the next trade, which would be the bounce, right? So you got the small run, the first pullback to the 50 EMA, which is here, and the bounce going down, right? That's the move I will be looking for right here, money spot, right? Just need confirmation with this. Now, the only thing about this is, oh, I'm sorry, I almost skipped the TDI part. So with my M's, I have to have a reload. So how the market baseline went above and below here, right? I got this going above the static line and kind of back above. This is what I call the reload. I'll just put an R there for reload. What I will be looking for on this move is a nice pattern off of this 50 EMA, which it was close, but didn't happen, guys. Did not happen. So on top of this being my fifth trade, the only C trade that I have, so I'm only putting a quarter and or up to 0.5% on this position, right? The main thing that I don't like about this, outside of the fact that it doesn't have a pattern, this trade for me is in what we call level 3.
Right.
We talked about journaling yesterday. Level 3 money trades, which again is my fifth trade, my C setup, they don't work out well, right? So I'm leaning towards more of the quarter than the half, right? But in addition to this, I don't even have a full setup. It just never happened. So this was a total pass, but it was very close. Let's drill down to the 15-minute. This was very close to setting up, right? So you guys know me. I'm always, oops, let me do it a little bit further like this. Okay, cool. You guys know I'm always looking for this M structure, break, retest this area, and short, right? That's the move, right? What do we see here? What do we see? We got this funny M structure, break this, come back, retest to go short, right? This is the same exact thing.
Yeah.
Same exact thing. But once again, I don't take level 3 trades because in essence, I'm banking that this is going to go even down further and it's already super low. So part of my check down basically is on my number 5, which is the money trade. I can't have it in level 3. It can only be in level 1 or level 2. So when I see that setup happen in level 3, it's a pass. It's a pass.
Could you explain a bit more about the levels to the people listening? Level 1 and 2, can you explain to them?
Yeah. So let me back it up a bit here, right? So this is really, really low, as you guys can probably see this. So when I'm up here, I'm gonna just draw some boxes. This is how I can kind of tell, right? So I got this all the way up here. This is my level 1, and I can tell because the order of it is red, blue, white, right? 13, 50, 200. This means this is level 3 peak, right? Peak high. So I'll just put peak high here. right? Now, this happens really fast because, for one, the market just tanked really, really quickly. But let's kind of zoom in here. We got two things happening really, really, really quick. So one, we have this 1350 cross, which is the blue one crossing the red one. And then right after that, we have this one crossing, right? The 5200. For me, I said this is peak high. I just want to pull this over so we can easily see it. Peak high will always be, or low. It doesn't matter if it's low or high, but it will always be. I'm just going to put L3, right?
Yeah.
Whoops. Level 3, right? So when we're at the height of it like this, this is level 3. Now, once the 1350 crosses, we are now in level 2, guys. We're in level 2. That's why this broke below here. Now, again, this is kind of a bad example, but so I'll show another one. But once the 5200 cross, which is the second one, now we're in level 3. I'm sorry, we're in level 2 at this point, right? So I kind of like to draw it like this. Whoops. And then let me kind of, this is such a short run because it tanked so hard, right? That the 1350 and the 5200 crossed so fast because this was such a powerful down move that it looks kind of funny. So for me, I'm just going to put L1, right? So level 1 is when the 1350 crosses. As a matter of fact, that's what I'll put here too, make it a little bit easier. L1 is when the 1350 EMA cross, right? This is how I can easily tell where I am in the cycle. Easily, right? And then once this 5200 crosses, and again, literally, this doesn't normally happen this fast. This is just such a hard move down that it happened pretty quickly, right? Once the 5200 cross, EMA cross, I know I am in level 2. So I'm just going to put L2. Right? So once these two things happen, this is how I know where I am. So let me just kind of back this up and then point something out here. And I'm going to draw this again, just to give it just a little bit more context, but we got this peak high, right? Break below, retest, break below, retest. Then it starts to pattern over all over again, right? So in essence, what I'm looking for on the chart, right, is this would be the L3. I'm just going to put peak high, which is L3, right? So you can easily see that. The next box, right, from here, oops, let me scoot it up just a little bit, right? This one, and I'll just make an arrow here. This is L1, right? After the 1350 EMA cross, right? This next box is level 2, right? Same exact thing. It's just the other way around in the next set of EMAs, right? So I got L2 after 5200 cross. Whoops, right? And then lastly, I got my peak low, which is this area over here. Let's put this down a little bit. Okay, cool. So then I got my peak low. Whoops. Which is once again L3, guys. This is how I see it.
Yeah, which is what you were saying, which you have been saying yesterday. I mean, it's the money is made in the middle. Why risk the peak high or the peak low, right? I mean, that's the message, right?
This thing could keep going high to peak high. This thing could keep going lower to peak low. It makes no sense to even try that.
Yeah.
Majority of my blown accounts have been trying to time those two.
Yeah, Good luck.
That's to say a lot, right? I literally, when I cut these two off, level one, that's why I say I'll only take level 1 and level 2 trades. Level 1, just to give a little bit more context, right? I'll put level 1 trades, right? I'm only taking this master trade. I'm only taking this combo trade. And I'm only taking this ID 50. Whoops, 50, right? That's it. Level 2, I don't think I've ever broke these up like this for you guys. So this is interesting.
Yeah, it's really
right?
good.
So level 2 trade, right? I'm only taking these two things, which is the M or W off 200. Whoops, off the 200, or the second one, which would be the money trade. These are the only two trades, like 2 levels that I'm taking. I'm not interested in the peak at all. Not one bit. Right? So I got these kind of in a way divided up, but I know what I'm looking for in level 1 after the 1350 cross. And then I know what I'm looking for in level 2 after the 5200 cross.
Yeah. It's a great explanation. It's really difficult for beginner traders to get their head around because they think low prices is what they're supposed to be getting, the lowest possible price for a long trade, and they're wanting the highest possible price for a short trade. But the reality is that when you try and do that, it's you're risking everything, and trying to get them to realize that get your confirmation first, get something to trade off first, and that's how you make the money. It's a difficult concept for people to get their head around, but after an explanation like this, I think hopefully we'll have a few more people coming over to our side about making money in the middle, right, and not at the extremes. So, really good.
Right. No, and in all seriousness, like I've had so many traders who will make me break this down, right? For me to really say, guys, like, I'll tell them, like, send me your markup, and I'll see them trying to take this peak high, this peak low. And I'm like, see, that's your number one problem right there. You're a little greedy, and you're trying to time this high and this low, which no one knows when that is going to happen. You have no real confluence, no real bias as to what direction this is going in. Yes, if you're finally right, will you make a lot of money and you have a great R to R? Of course you will. Of course. But by the time you lose 8 trades in a row to figure that out, you're really just getting back to break even, right?
Yeah.
Like, it's no point in trying to do that. Your best moves is the break and retest in level 1 and level 2. That's it. Leave the rest of them alone. I'm only trading. You know how they have that. Let's say it's something like this, right? And then it might be something like this, right? I'm only trading in this sweet spot right here in the middle. That's it. This is too far left, which is peak high. This is too far right, peak low. I'm only in the middle right here. Level 1, level 2. This is my profit zone right here. The rest of it, I don't even care about. It doesn't work. Yeah. Like, it just doesn't work out well in the long run.
No, I mean, there is in crypto, there is my sentences start with that. In crypto, in the world of crypto, in crypto, because we get a lot of black swan events and we get a lot of serious crashes, there is legitimately strategies. It's called buying. It's called essentially buying the oversold bounce, and it requires a scaling in strategy to do it, where you try and essentially catch it. But it's not. I have always stayed away from it because it just goes against my trading principles, like you've just described. But there is an argument, and there are strategies in more volatile markets because you can make a lot of money. My mentor just used to trade oversold bounces, in a bear market. So you get a really strong crash and then a quick recovery once the fear subsides, and it's just a quick 50-70%, right, in crypto if you're on the right token. But it's still, so there is a strategy, and he was always promoting to have some money on the side for those emergencies. But it still requires a strategy, and it still requires an approach, not just, well, it's high enough, right? You know, so, I mean, right.
Right. You're asking everyone. You're looking for confirmation from everyone else. Like, right? No, it's actually not.
But
No.
you know, high risk stuff. Not promoting it. That was great.
And again, if you want to have a super small of, you know, something for that, by all means, you know, like have at it, have fun with it, you know, do what you need to do, whatever. But when it comes to just, I'd say pay attention to your hit rate. If your hit rate is a lot lower than you'd like it to be, maybe you should stop trying to take that, right? Yeah. And I'm just a stickler for figuring stuff out. Like, I promise you, that's like one of my main things. I will stay up all night over something that's like, I just can't figure it out, right? So this goes right into line with things like that, right? Like everything that I preach about, that I talk about, man, if I could pull up a video of every time that why I think that and say that, I'm like, oh, you see this car right here? Yeah, back in 99, I was at this bar, and you know, like the whole story for every rule, there's kind of how I showed the checklist yesterday, right? Like there's a rule and there's a reasoning behind this. This isn't me just randomly saying, oh, I don't like that. Like, it's been tested. I mean, more times than you think, right? So all of them together in some conglomerate of, all right, let's just trade. Mark Douglas, trade in this zone right here. You'll be good to go.
yeah, absolutely. For sure. Great thing. Let's let me jump onto the money flow. Let's check
it out.
I think Ethereum is trying to come back to life. So let's have a look. Let's see what they're all doing. Okay, so this is Bitcoin dominance. Can you see that okay?
It's trying to come in now. It's not there just yet. Maybe try it again. It's not a.
Yeah. I think so. Oh, right. Yeah, that was my fault. Totally my fault. Yeah, I got it. Okay. How about now?
Okay, here it is. Yeah, it's coming in now. Okay, so, perfect. I can see it.
So just orientating for people who haven't been watching the streams and are new to the channel. Bitcoin dominance is essentially represents the money flow. When it is trending up, that means Bitcoin's market cap is growing out of proportion to the rest of the crypto market. And when it's going down, that means the money is flowing into the altcoin market. Essentially, people are opening positions. And this doing TA on Bitcoin dominance can give you an edge because you can, of course, time your long moves for breakdowns of patterns. Of course, everything is the inverse. So this is bad for the altcoin market. This down here is good. And we've finally broken down. And if we look at the long term, this 2-year trend where the altcoins have only had these like little moves to run, you'll see again, finally, we're starting to lose a bit of momentum and this line is breaking again. Now we're still not out of the woods because this is still an uptrend, but this is sort of the game. So this is quite positive. And so if we look at Ethereum now and see what it's doing, it's recovering because of this move, right? The money flow is now moving, and look, Ethereum is trying to break back into, just for context, there's the pattern. This is the buy zone, but we slipped back underneath this primary trend line. But the second the money flow gives us something, and the money flow is giving us something because Bitcoin is approaching long-term support, and it's most likely there's going to be a reversal as it's trying to kind of make moves upwards. The rest of the market sees that. The money flow then reflects that, and then things start to move. And obviously now, if you want to get into Ethereum, short-term trade, just like we were talking about, put your head up, buy the retest, look for volume, take it there, right? Or if you're long-term, you're looking for a long-term move, and just for context, this is the previous bull run, and you would expect this bull run that it would break above that. So we have a long way to go. I mean, for me, Ethereum, if we have a bull run this time, 10K for sure, right? Probably, hopefully, maybe, right? So maybe fingers crossed. But now we've got something to trade. Before it was down here. nothing to trade. And you can also, little shout out to Igor as well, because if you're using the RSI as a means of also trying to confirm what's going on, right? It's a bit janky, but you can see, there you go. It's popping its head up, right? Giving us our first little sign. We're doing it here. So we've got confluence, finally something to trade. But if you're trying to trade Ethereum here, I mean, we always said that it's probably just going to be a bear trap, but we're not out of the woods yet. So, I mean, we need to come up, but we're still in a downtrend, right? In the intermediate trend, right? We still got a ways to go before we can, we want to see, if you're looking for Ethereum, I mean, you could just hop in here. I'm not sure I'm recommending that. I think what we want to see maybe something like that, right? And then get in, because it's a clear break of the trend, eking out a higher high. I mean, crypto's volatile, peeps. So it's like, you're not going to miss out. It'll come back down because it needs to, because buyers need that confirmation too, just like the sellers do. So Ethereum coming back to life, and the money flow, of course, is giving us that. But let's have a look at total. So this is total 3. We've been looking at variations of this chart, and I've done a fresh one for today because, as we talked about, every day you got to get a new perspective, and you want to get the best eyeballs on the market. So this is obviously in a pattern with probabilities, which are going to break to the upside. We've got some nice confluence with this support approaching, and also we've got 3 bullish divergences that I can see on the MACD, which I don't often use, and on the RSI. So, and we're peaking above this moving average as well. So this is obviously the previous all-time high when Bitcoin broke the all-time high back in March, and we're all the way back down. This is the run up to the election. So we've got so much headroom, right? This is the bull run up here, and we've got so much headroom. So this is starting to flash, right? And this is why Ethereum, and if we look at, I don't know what, I haven't looked at Litecoin today, but they're trying to find a floor, right? I mean, that's a higher low compared to that, right? That is just eking out a higher high. So we're doing our best. The market's trying to recover, and as I always keep saying, this is the game, right? Don't just be like, this YouTube.
I'm buying Bitcoin.
Just now's the time. I'm like, then 2 weeks later, now's the time. 2 weeks later, now's the time. So we don't need to play life that way. We can look at the charts, find the information we need, and this bullish divergence, everybody sees it, right? Everyone sees it here, and that is telling us, right? Okay, so we've got evidence that the market is starting to reverse. You then look at Ethereum, and you're like, right, I'm seeing it. We need more, but this is the first step. The same with Bitcoin, right?
Yeah, for sure.
It's like, we're nowhere where we want to be, but this is better than coming down here, right? And now we may see this, right? I mean, that might happen, right? We've got a lot of sellers, but what we're the market is trying to reverse. This is a lower low though, so it's still worrisome, but this is the whole game. And this is why I come to you every day with different charts. He says, looking at the one from yesterday, different charts.
Hey, a lot of it still makes sense.
Yeah, because this is the chart now. This is like, this is what
I'm so sorry. Give me 1 second. I'm not sure what's going on. Give me one moment. I'll be right back.
I'll carry it.
One second.
Okay, so this chart, people, is the one to look at, because the breakout is the next potential trading opportunity. Whereas here, looking at this chart, we've got quite a bearish bias because we've got the 4-hour coming in, and it's unclear what we're supposed to be doing. I mean, how are we can trade this when we're in the pattern. Within this pattern, we can trade it. It's a short trade, and that's what we were saying yesterday. But now it's here. There's nothing for us to do on this chart because we're just not getting the signals we want. Right? We're trying to get above the 200 MA, but there's resistance overhead. I'm not liking it. But this chart allows me to see more of a bullish context, and it allows me to properly assess what's going on. And all I know now is if it breaks down from this diagonal line, then it's a potential short opportunity, not all the way down here, maybe just to here, which will allow us to maintain the bullish context because we've got a low, higher low. Obviously that was a higher low, but in the context of this, it's still a higher low. And, you know, we want to maintain that. So for a bullish trend to maintain, you know, we want this maybe to do this. So we do that. We've had a short-term bearish bias, but then we scoop it up here, and that's still a higher low in the price action. So this is where you would take profits from a short trade, because we probably will just find our feet and move upwards unless we get a break lower. So this is how we trade it. This is how we work it. And again, like I showed with this diagonal trend line, if you are looking at charts and your chart is closer to this, right? That's not enough, right? I mean, congratulations for having the moving average, right? But it's
right.
You know, the way, as you can see, our process is extremely thorough, different, but extremely thorough. We're looking at multiple angles. We're trying to figure out what to do. You know, are we going to take a short trade? Yeah, I'm pretty sure that there's a short trade here somewhere, but you've got to decide where your price target's going to be. And that can only be answered by having a look at everything else, seeing what we're doing. And, you know, and that's the general idea. And it's a lot of work, right? So this I can do these charts very quickly now. But when I first started, no, I couldn't. It was I would spend half an hour just trying to figure out where's this supposed to go, right?
Same.
You get better.
Just how you asked me to do the levels just a moment ago. Man, it took me forever to figure that part out, really. Like, oh, I kind of want to, this 200 cross, 1350 cross, this is what's helping, you know, kind of match it out. And I think a lot of traders, right, they find joy in saying, oh, I'm trading naked. There's nothing on my charts. I'm like, it looks like you don't have your glasses on to me, but
I mean, what are you trading? I mean, it's, you know, you to make money in any market, you need an edge, right? And you have to think, what are the other traders doing? They are charting. So if you don't chart, they're going to win. What are other traders doing? Are they trying to buy the bottom, the complete bottom? No, they're waiting for bullish confirmation, as we discussed. And that's how you get the edge. If you are just like, yippee, we're here at 1.14 trillion, and I'm gonna, you know, that's not how it works. And you've got to, you know, I look for divergence. Why do I look for divergence? Because it gives me an edge. It gives me an insight into the mechanics of the price action, which these candles don't give me, right? And if I don't load up these, I mean, I don't like the MACD, but I load it up because I can look for signals, right? And I mean, I thought, seeing as we're talking about divergence, I think it's important to just touch base with it, perhaps.
I already know where you're going with this. Like, you can't use that alone, in essence. That it still needs to be something else with it. Yeah. I mean, but so this is a divergence cheat sheet, right? Now, the reality, so what we're looking at here is classic bullish divergence, right? Regular bullish divergence, where you have a downtrend on the bottom with this line here, okay, in the price action, and then you have a diverging trend, a contrasting trend on the oscillators, which the oscillators, of course, give us, you know, they know more than we do about what's going on under the hood, you know, and that's why divergence is important. But I would never trade off just divergence, because then essentially my chart would just be this, and I would see it and then I'd trade off that. But I can't see what's going on in that. And also, the reality is that, so there's a load of indicators we can use. So I use divergence for many version 3. Now, this will show me divergences with different oscillators, and you know, it's correctly identified there's 3 here as well, right? But not all divergence are created equal. So I wouldn't ever suggest people should rely on the indicators, because the reality is, when you're trading, you're not just going to get a clear bullish divergence. You might have the price action flat, right? And then still have a divergence on the oscillator,
but that's not as bullish. And you have to learn to interpret those signals. And likewise, hidden divergence, which is essentially in a bullish context, allows you to see if there's going to be a continuation, right? You're not going to look at the top of a pattern and see hidden bullish divergence, which is an implication that we're going to have higher prices, because ultimately the oscillator is cooling off, which means there's more upside for that, which promotes the price action to go higher. But I'm not trading the divergence exclusively. I am using it to think, you know what? We're reversing here probably because we've got a 70% chance of a break out of this pattern at some point. We've got a long historical trend line and we've got bullish divergence on a few oscillators. Now we have a plan. But if you're just like, you've got this only stuck to your wall, no other patterns, nothing else, then you're going to fail. But if you incorporate this, which admittedly is the crystal ball of trading, the closest you can get divergence, right? But if you're using it in combination with existing TA, then you will level up as a trader, because not everybody is using divergence. And that's where you start to become the one taking other people's money and them not taking yours, right? And that's what we're trying to get to as a trader, I suppose. Oh, I think we've lost Michael. Oh dear. Okay. We've lost Michael again. Okay, so let's load up another trade. It's such a good practice to look at these setups before jumping into a trade. Yeah, so let's load the chart back up. Let's just have another chat about that. Let me just share it. Here we go. Okay, just to finish things off. Right. So yeah, now if you are looking to trade altcoins right now, you need to think about what are the warning signs, right? We still are in a bearish context, right? We've got divergence, right? That's great. But the divergence, how far is it going to take the price action? The more divergence, the better. But there's still a lot of resistance. And the divergence doesn't really get this 200 moving average out of the way. So we have to accept that we can't just trade off this, because if you look at the price action, we have to presume it's going to continue in this pattern until it breaks out. And until it does, you can't presume it will, because it could just continue to go down here, and then this divergence will invalidate and you won't have a trade. And this is the negotiation we're all trying to have. So if you're thinking of getting into an altcoin trade, is this in an ideal position? Not yet. Is it in an ideal position now? Better, much better. The divergence will help us play out, and we've clearly established that we're moving upwards now. Or if we come down here, a lot of this divergence will probably be invalidated, and then you have to reassess, because a breakout at this level, we've still got lots of resistance overhead. So, and the 200 MA will still be overhead, and that's not necessarily where you want to come in. Bearing in mind, this is total, this is the crypto total market cap, excluding Bitcoin and Ethereum. So we're not buying this, but it will give us an insight into what Ethereum is doing. It will give us an insight, because this money flow popping above the 200 MA, it's what's driving the move from Ethereum. And Ethereum is a good barometer for the rest of the altcoin market. So, and there's another tip. If you are looking to assess what the market is going to do, look at Ethereum first. Ethereum is a really good measurement for what's happening, right? If you see Ethereum starting to recover, then the rest of the market will follow. But if you're looking at Ethereum and it's still stuck down here, which it has been for the last week or so, then the rest of the market will likely be the same. So there's another little tip, but it's another chart for you to chart and assess in order to be successful in this market. And that is a full-time job, really, for sure. And let's have a look at my notes, see what else we got. I hope we get to see Michael before the end.
Oh, okay, there we go.
So let's have a look. Oh, you're back. You're back finally.
I don't know what is going on. Okay. I'm sitting here like, hey, can you hear me, Paul? I didn't know what was happening.
Well, I was just doing my own thing. It's fine. So it's yeah, I was just shooting the breeze. I haven't missed much. So I think just this is what I just wanted to just mention before we finish. Completely random. It's just, this is an example of an SR flip and retests in an uptrend. So I get a lot of questions like, how do I trade a bull market, right?
Mm.
And it's because right now it's all about reversal patterns, right? It's about getting bullish confirmation out of these, the W's, etc. Trying to get the confirmation up to the next level. Like you said, this is the bottom. This is your, what did you call it? Your level 3, was it?
My peak low. Yep, level 3 peak low.
Yep, level 3 peak low. So we're not touching this until we need something else. And then once we get that, our trading strategy will, well, at least in crypto, our trading strategy will change, because obviously we have these cycles. So you wait for the breakup, but you allow it. We want a strong move, right? We don't want it to be just like eking along here, because it's probably going to break down. Then let it create the range, let it form it, and then you're looking to come in on the retest, and then you can either ride it up again, or if the market is just going, you've got a good entrance, and then you can ride it up. But what I was doing in the last bull run with some low caps, I was just doing this all the way up to the top, right? And bearing in mind that if you're just kind of buying here and selling up here, there's more profit potential if you kind of just do singular moves and you repeat it each time. So not here, wait for confirmation, buy the retest, sell here. Wait for the breakout, buy the retest, sell here. Wait for the breakout, because then if the market reverses, you're in control, because when we get to up here and we start breaking, right? Okay, I've had all these fantastic trades, no problem, but now I've got my sell signal, and you can see here's the bearish retest on the opposite side, and that's how you do it. I mean, this is obviously really straightforward, but people sometimes can overthink how to trade these uptrends, and they get confused. But this, as we were saying, this is where you make the money. Not here, not here, here. Right? Yeah, this is it. Right? With the trends changed, we're moving upwards. Now we want to capitalize on it. The trend's changing. Now we want to wait and then capitalize on it and go down. Not the bottom, not the top, in the middle. So
100%. 100%. That's exactly what I preach all day long. Leave those peak lows and peak highs alone and make the money in the middle, right? Us sane traders, we understand that. Those living on the edge, which is peak low and peak high, can be gone at any time, right?
Yeah.
Where
so
do you go? Look like we got a question here before we jump out.
Yeah, let's do that. Let me jump out. Yeah, let's do that.
Yeah, I saw a question just come up. What are your go-to tools for figuring out if you should be jumped into a trade now that you mentioned divergence? I guess this is more directed to you. We got this from
well, the point I was just going to make is even if I see divergences at that like level 3 area, which using your language, Mike, I'm not stealing it, I promise. It's you're not going to have a trade, because great, you've got bullish divergence, but you haven't had confirmation from the price action. So the divergences can invalidate people, right? They're not guaranteed, right? You get a dip lower, they're gone, right? So you then want to, my go-to tools are waiting for confirmation. If I'm in a bear trend, I'm not entering until I have bullish signals. The first bullish signal, as you talked about, is what gets my attention. The second signal I'm planning on, and then the third signal I'm entering on, right? That's the approach. And if you wake up one day and you're like, right, I think this token or coin is bottoming, I've seen some divergence, and you're like, but I want these low prices, because if I get these low prices and it hits this target, that's 200%. But if I wait, that's only 140, and I need 200%, right?
Right.
So you're making that mistake, and it's the whole conversation. I mean, you have been more eloquently saying today, but so get your first. I mean, I'm just copying you. This is your answer, Michael. You just get first bullish signal, gets your attention. Have a look at what's happening. Second signal, right? Whether that's the formation of a which is WMs, whatever, right? Then start planning what you're going to do, what you need to see, right? Yes. And then you get the third signal, because that's what the market participants will also see. If you enter with no bullish signals or just one, the bears are still in control, and you've just put your canoe in the river the wrong direction, right?
Yeah.
And you just go backwards like this, right?
Right. You wonder why you all over the place. It's like, guys, you need further
I want to go there. Why am I going back here? Right.
Right. You need further confirmation. That's the epitome of, you see a cute girl at the bar or whatever the case may be, and she looked at you. You asked her for a phone number. Like, whoa, slow down, guy. How about little conversation? Yeah. See if you have some interest in common, then ask her for a phone number. You know,
no, I wasn't looking at you. I was looking at the guy behind you, right?
Right. So slow your roll, slow your horses, pal.
Yeah.
So, definitely got to wait for some confirmation, right?
Wait for the third look. The third look. She wants to look at you 3 times, right?
Right. You said it. Perfect.
Well,
yeah, obviously. Yeah, of course. And then we actually asked us something. They say, hey, such a good approach looking at those setups before jumping into the trade. Yes, you got to have a good practice. We like to say a if-then scenario before. If this happens, then I'll do this. If that happens, then I'll do that. If none of that happens, I'm not doing anything. That constant if-then scenario, guys, that's so important. That's going to keep you out of a lot of bad trades, right?
Yeah,
so
totally.
Yeah, definitely good point. But hey, thanks for the questions, guys. As always, Paul, it's a pleasure working with you, bro. I really appreciate it. It's always fun. We get a lot of laughs in, learn a lot.
Yeah, great stuff. Great tips today, Mike. Great.
Absolutely. Well, hey, I'm sure I'll catch you soon, whether it's tomorrow or another day in the week.
Yeah. Look forward to it. Have a good one.
Absolutely. Yeah. All right now.
See ya.
Hello, Howard. How are you?
I'm great. How you doing? All good on this FOMC day?
Yeah, got what have we got? About an hour left or something, and then it's coming out.
Yep. So a little bit. I guess people will be a little bit cautious now in this kind of hour to go thing.
Yeah.
Closing things down and not getting too aggressive.
Yeah. Well, it should be an interesting one. See how the markets react. But yeah, naturally, to all the viewers out there, FOMC, big one. Well, a big day in general. FOMC is always big. Yeah, we got it coming out exactly in 1 hour's time, and then we got the press conference as well in an hour and a half. So, naturally speaking, I don't think we're going to be entering any trades right before it. That would be very risky. So it will be a more chilled one until about an hour's time when it actually comes out, and you're going to see the markets go a bit crazy, to say the least. But yeah, to all the viewers, if you want to leave comments, please do leave some comments in the chat. We would love to have a chat, love to answer any questions as usual. So yeah, how's your trading day been, Howard? Stay, have you managed to find any opportunities?
Actually, I had a crack at the euro on the long side earlier today, but I managed to sort of get in a little bit too early, and it came back on me. So I got out of that one. So then that's it. That's pretty much it for the day. Some very interesting setups on the yen crosses, which I looked at the other day, but some of the majors like on the FX side, sterling, euro, even like the commodity related like the Aussie and the CAD, they seem to be a little bit boring today. But I think if it weren't FOMC coming up fairly shortly, I think I'd be looking to probably go long on euro yen and sterling yen, and I'll show you why.
Please.
Yeah, some really good setups were it not for FOMC. But let's just show
Damn
you what.
FOMC.
Damn you. Okay, let's start off with euro yen. Okay, so let me know when that comes.
It's up.
True.
Yep.
Okay. Perfect. Okay. So so we've been in this great big range for quite some time now on a longer term chart. And yesterday we tested the trap level, if you will, the level at which we've got people trapped above and it rejected from it. So we had a long upper shadow on the candle yesterday. Today we saw the kind of natural consequence of that, an attempt going lower, but we've since seen a kind of equivalent long lower shadow, which to me indicates that demand is coming up, perhaps for a push through this level. So it looks to be quite. I would have expected normally after that rejection yesterday to see this thing really start to head on down, but it appears that people are coming in there. It's kind of gravitating a little bit towards this level. So that's quite a strong underlying tone, I think, at least over the short term. On this one, and just looking at the intraday chart, we have. I remember yesterday we were talking about trap levels on some of these currencies. I think today we've got quite a nice bear trap in play on this one, and also on sterling yen, where we had that kind of breakthrough support, and then a kind of bungee jump back above it, and now we're settling back above it. So I think there are people trapped below this line.
Which time frame is this? Sorry.
This is 30 minutes.
30 minute. Wow, look at that. We had a really tight consolidation, and then it took out the liquidity from the top and bottom. That is quite a move, isn't it?
Yep. Certainly if there were no FOMC coming up very shortly, I think I'd be diving in on looking to buy perhaps an upside break once we get through this level here. That could be a good buy the break thing, or if we just stay here for maybe another 10-12 hours or so, then it could be good to say, well, we've seen a consolidation, we're ready to go again. So technically looks pretty good, but obviously we've got this big fundamental event fairly soon, so let's see what it does. So yeah, I think there are a lot of people that sold that breakout, or they chased it down, and there are people that are trapped under this line. Either they were long and they got scared out on the breakout and they want to be long, or they went short and they're sitting there kind of worrying a bit. So I think psychologically, yeah, you don't really want to be holding short somewhere down here, especially when you've got FOMC around the corner.
Well, some people might be hoping FOMC pushes the market down. I think if people are genuinely trapped,
well, there's hope. Hope is not.
Yeah.
Hope is not a strategy, though. Not a good one, anyway.
No, definitely isn't.
So yeah, technically, I think this one looks pretty good, but obviously we need to see what happens with the announcement. And just to show you the kind of the mirror image, I guess, or not the mirror image, but the equivalent on sterling yen. The kind of thing. It's been in a range on the daily chart for a good several weeks, several months actually now. We just chop. No real directional bias at the moment on this thing. Last few days it started to creep higher, but it's nothing it hasn't done already within the context of this great big range. And on the short-term chart, again, that same thing where just like the other chart where we just had that flush out through the support and then straight back up again. I think by comparison, sterling seems to be doing a bit better than the euro because this one's a lot higher than euro yen is by comparison. But the same kind of pattern where you've got that kind of flush out and you've got people trapped below this this line here. So either they're sitting there worried that the FOMC is going to be bullish, or maybe they're just concerned that they got shaken out of their long positions and they really want to be long. And by the time they get long, it might be up here,
Yeah.
So c'est la vie. That's the markets for you, isn't it? It's
yeah. Wow. I mean, that is quite a move. That is, taking out the top side liquidity and then straight down, and then a lot of traders get stuck in that. Especially if you're chasing the market. Oh, you're going to be so disappointed if you were trading around that time. But hey,
it's going to break out. It's going to break out. No, it's not. Yeah. And I guess just to go back to what we were looking at yesterday, we were looking at sterling and euro yesterday, just as a kind of follow up on those ones. So yeah, we were kind of looking at it up here. We had the kind of fake out on the way down. That was a kind of a little bear trap for the intraday traders. Then up we go again. We saw the late rally, and then it closed kind of firm. I got out, and it was kind of like, okay, I made a little bit of money. It wasn't a whole lot, nothing exciting, but
I think it was.
And
sorry, I think it was the euro or the pound, where when I looked at it, someone was trapped right at the top.
That big volume, wasn't it?
We were saying, that is dangerous, really scary, and it looks like they were genuinely trapped at the worst possible point. Ouch.
No, you nailed that one there. That was a really good spot. That really was.
I haven't looked at the chart since then, so I'll be interested to see when they finally got out. But obviously, push came to shove and it broke through. I got back in actually looking for this kind of break to kind of gravitate back up, but it just literally failed, and I just got out on the way back down again. So I'm not really going to be in this thing ahead of FOMC. But I think the tone appears to be quite heavy at the moment. On the daily chart, you've got this. I noticed on the daily candles here, you've got that thing where actually before the big break, we had that little kind of fake out there on the daily candles, and then the big shakeout, and then that was the bear trap on the way down, and then up it goes, the real move. So maybe we're doing something a little bit similar here, where we need to come back down through this pivot here, and before we can go again, just to shake it out. Absolutely, yeah. Wow. Really interesting.
So what are you seeing on the stock side? Any a bit of strength this morning by the looks of things?
You know what? I got into 2 trades today. The first one was going really well, and then it got so close to my take profit, and it decided to reverse. I'll show you. I mean, I got I didn't get stopped out. I didn't lose money on it, but I pretty much got out break even. Can you see my chart? It's my
Yeah,
chart up? Oh
yeah,
yeah,
got
it
it.
is. Yeah, sorry. It was this move right here on market open. I saw some buyers get trapped right at the top. I'll just highlight it and I'll show you on the footprint in a minute.
Right.
But literally right there, saw some buyers get trapped. And
Yeah.
now I was a bit eager. I should have waited for those buyers to be getting out the market, but I saw them getting trapped and it was moving against them. And sometimes, you know, you're like, well, we were quite bearish yesterday. It kind of makes sense. This was an area where, you know, I had marked out already. I think it's going to drop down. And it did start dropping down. So I entered, but then I had this area marked out as well. And I'm not joking. My take profit was this bottom of this wick here.
Oh, I hate it when it does that. I really...
And, you know, it got so close and I was like, it's fine. Yeah, it's going to hit it. And, you know, I took my eye off the market for a bit. And next minute I see we're almost back up to my entry. I'm like, what?
Yeah,
like,
any second now. Yeah, just...
What an absolute joke. You know, that really peed me off a bit. Then I did get in for a really nice trade right here. Sadly, I didn't record the screen, but I got in right here, literally this area that I had marked out, this gap of volume. We broke through it, came back. I saw a bit of people getting trapped. I got in pretty much at no drawdown. It was lovely. And then I got out at these highs, but I didn't put it to the wick because I was worried the same thing would happen again. So I got out at like a bit closer. I think I got out actually quite lower down, like around here where we started seeing it consolidate a bit. And I thought, you know what, I'm just getting out. But I was happy. I made my money, so I was happy. But then we broke through this level and now we have rejected off this big one here. So it's literally doing the zigzag, you know. I know that's not a technical term, but I call it a zigzag, where go to one level, comes back, retests, and then blows through it, and then rejects, and then it just keeps doing that basically. But now with FOMC coming out, I couldn't tell you what the hell's going to happen. I mean, no one can, right?
No.
But if I go to the footprint, sorry, you were saying?
Yeah, I say just let them do what they got to do with this, these announcements and things. And
exactly. I'll show you where I originally got in. I had it all marked out here. So it was these buyers right here that were getting trapped just as market opened. And then we started moving against them. I literally got in pretty quick. It's still green, but at the time, as it was around this area, we saw a lot of heavy selling going on around here, which I'm assuming was people pulling out. Eventually, it did kind of like hover around there and buyers got in, but they just couldn't push it down. Made a nice move down again, more people getting trapped. So I was very confident in this trade. And then we just had this nice, I mean, it wasn't a huge volume on the sell side, but it was moving down very nicely. I was very confident that we were going to hit these lows here. And we got, I mean, ever so close. And out of nowhere, all of a sudden, this happened. I mean, to me, it was like it gapped. If maybe on the 1 minute we could actually see how quick, because I promise you, I took my eyes off the market maybe for a couple of minutes because I was so confident we're gonna hit the take profit. Like, so I wasn't really staring at it, and it just flooded up. Like this candle in between it just jumped, and
it's as if they released the announcement earlier.
Yeah.
So and then, is it news related? Where'd that come from?
Pretty much. And then I saw, a bit more heavy buying going on, and it was around this area where I had to get out. I mean, it was pretty much at my entry. I was like, I had to get out then. I mean, I everything was telling me, and what really scared me wasn't so much these numbers here, the 1,800. What really scared me was where it really gapped. where it jumped up was here, and it's all the same numbers: 422, 422,
Oh,
and
iceberg.
yeah, to me indicates that was an
It's a
iceberg
big order.
yeah, splitting it up, and it literally just jumped up. It didn't move up. It just jumped from here to here like
Yeah.
instantly. And then
Yeah.
I was a bit frozen, thinking, should I get out? Because it was so close to my take profit. That little bit of greed hit my head. And this is where psychology matters, I
Yeah.
think, in situations like that, where I was thinking, okay, look, regardless, if it stops me out at break even, it stops me at break even. Okay, I'm not gonna get out a bit early
Yeah.
here, because it might, it might not allow these buyers to get out the market, because they've never actually really gotten out. Looking at the count, so they might keep them trapped, and if that is the case, then it will just come back down. It'll be like a little retest. So I thought I'll hold it to basically my break even, but then when these big numbers came out, that's when I kind of knew 100% now this is finished.
Yeah.
And then
The buyers are in control.
yeah, and then it just flooded up, and then the next position wasn't so much volume based. It was more just the way, I mean, there was a bit of volume. Like I could see the buyers getting out near the top here. I think you can see it better in the 15-minute. But there were a few bigger numbers coming in. Why does Trading View always do that? When you change time frame, it decides to put you back hours in the past. I mean, I want to look at the same area. But yeah, we saw a few bigger numbers coming: 600, 600. That's another 600, another 600. A lot of people leaving, basically. So I knew it wasn't extra sell pressure coming in. It was buyers getting out. So around this area, when I started seeing a few, buyers coming in again, especially on the depth of market, I saw it very nicely. Sadly, I can't replay the depth of market because it's live and it's not recorded. I got in again and pretty much got out. This made me a little bit nervous, this pushback here, but I decided to hold through it. And then I got out. I can't remember exactly where I got out, but I think on the 5-minute I'll be able to remember what I saw when I got out. To be honest, there was nothing in particular that made me leave. It was more just I didn't want to hold it to the wick just in case. I didn't expect it to do another leg. To be honest, I wasn't expecting another leg up. Where's the market? Yeah, I wasn't expecting this leg up all the way up to here. Like that, I didn't expect. I thought we would start consolidating around here somewhere, and it would just kind of go sideways for a bit until FOMC comes out. I mean, it's moving a lot. I'm not surprised it's moving down because there's a lot of buy pressure in the market. I'm assuming a lot of the buyers are getting out from earlier because of FOMC. So it's just releasing that pressure, and we're having this kind of movement down. So I'm not surprised it's moving down. Yeah, exactly. People getting out the market in, just before FOMC. But yeah, I kind of just got out here somewhere. It was just struggling, and I think you can kind of see it on the 5-minute. Although it looks like bullish candle, bullish candle, bullish candle. These candles were just really struggling. They kept going up, down, up, down, up, down. It was just struggling to kind of get past this high here. So I pretty much got out because I didn't want it to come back and then be stuck in like a bigger range. Because I was potentially thinking we were going to just be stuck in a range like this. And I thought if it is a range, well, I'm at the top of the range now, so I might as well get out, rather than wait for another cycle. Sadly, literally, it wasn't long. Five minutes later, it started pushing up. But what can you do? But then again, I wasn't that far away from my actual take profit, so it wasn't the end of the world. But yeah, that first trade. Although it wasn't bad, it was just annoyed me because it got that close to my take profit. And I ended up with nothing in the end. But these things happen.
Is that something that would make you think maybe I need to adjust my targets just fractionally in the future, or are you happy just the way you go for your targets?
It is rare, to be fair. It is rare
Yeah.
that it happens like that. But
Yeah.
I mean, it certainly had an effect on me mentally in this one because I didn't hold it.
Yeah.
You know, I could have, and I did actually put my take profit not at the wick, but a bit lower down. So
Yeah.
it did have a mental effect in the short term where I wasn't repeating the same mistake.
Yep. Yep. Yeah, it's weird the way the markets do that, isn't it? You kind of, right, okay, next time I'm going to do this, and then they get you that way.
Yeah.
It's just the way it works.
It is. And looking at the volume, I mean, I'm not seeing any. I can see buyers getting out near the top beautifully. Right here, nice big chunk of buyers got out from earlier. But yeah, and you're seeing generally quite big numbers, but not huge. 700, 800. I think people are just sort of pulling their money out of the market. I highly doubt anyone is actively getting in with large orders right now. I would be very surprised if anyone is doing that. Someone looks like they got stopped out at break even here with the 1,000 contracts. I wonder.
Yeah,
I can imagine that would be a breakout trader who entered
so
a bit earlier.
By the break of the open or whatever. Yeah, before the move.
Absolutely, because it's very close to structure, and I highly doubt that someone's selling 1,000 contracts right there. So everyone's getting out the market in anticipation, which will be fun. I want to have a look at, was it euro that we looked at yesterday? I think it was the euro, right? Or I can't remember if it was the euro or the pound.
Euro and the pound.
Let's have a look.
Yeah, I think was it the pound with the big volume? Was it the euro?
That's the one I'm trying to think. I can't remember which one it was, but we'll find out. It looks like it was the euro because I highlighted something here. Yeah, no, I think you see it in the 15-minute. Oh, it's done that again. My apologies. I've got to find where the chart is. Where the hell is it? Ah, there we are.
Got it. Not that one.
It wasn't the euro then. It must have been the pound. Okay.
Yeah, because it trades a lot smaller volume by comparison, doesn't it?
Yeah.
So big stuff will stick out.
Was it the pound? I mean, it was definitely there. I didn't imagine.
Yeah.
No, it wasn't the pound.
No, I remember very well. No, we were talking about that, and
no, it was definitely the euro then, because I'm starting to think whether TradingView there's an issue with historical footprint data.
Would they change them or
potentially? I mean, I think it was there. 600 plus 500. For some reason, it's unless I did it on
maybe in a different time frame.
But I'm pretty sure I only used a 5 or 15. So if I can't see it on either of them, I'll be a little confused. No, it's definitely not on the 5. 5 doesn't. Maybe it was the 1 minute. I doubt I was using the 1 minute, but you never know.
Maybe we both dreamt it.
Yeah, I mean, I'm confident it was definitely there. I didn't make it up.
It was. It was. No question. No question.
Oh, what have I done now? Someone dragged half the chart. My computer's very slow today. It's definitely not the 1 minute. I mean, this looks very alien to me right now. Where did I start where's the high? Ah, there it is. Might have been the 1 minute. I doubt it. I rarely ever go on the 1 minute chart. No, it's definitely not the 1 minute. I think it was on the 15, but for some reason It's broken it up
Bizarre.
into 2 price levels, whereas before it was
Yeah.
on one price level. Even the box I drew is not lining up perfectly to the price levels, which is a bit odd, because normally I would highlight the actual square itself.
Yeah.
So it looks
Yeah,
like, I mean, here was the
but
guy, I think, whoever it
that's
was.
it. Yeah, that looks like it. But yeah,
Um,
and that was the top. That was the top.
yeah. And I mean, that was shocking. Because yeah, it's a dangerous play, and it kind of moved sideways and then just moved against them.
Just drifted in early Asia, just drifting back, and then a bit more aggressive later on before the European, as the Europeans came in, I think.
Yeah, I feel sorry for whoever that was. That wouldn't have been a nice trade, because you would have been in drawdown instantly, and it would have just got worse and worse and worse. There was never even a chance of getting out again.
No.
Maybe here, if you were very lucky, could have taken a little bit of a loss, but yeah, it just went against you.
What was the volume like on that flush out in a bit later on? The sell-off, basically, when they dumped it.
Let me switch to candlesticks.
Yeah, that one.
So I can
Was
see
there
it better.
big?
This one here, or
yeah, that one. Yeah, before the
area.
bounce.
Okay, let's have a look.
Imagine that'd be a bit tasty.
Hopefully, let's have a look. Again, so I think anything over a few hundred is quite big on the euro. So
yeah, well, I guess obviously it's not. It's the kind of early European, late Asian session.
Oh
it,
yeah,
really?
yeah, 7:30 in the morning here for the UK. Yeah, I mean, no one was massively trapped, but there was a lot of bigger numbers on the buy side, indicating, I think, a lot of V sellers from early on the Asia session getting out, basically. See if there was before any big move, there was any people getting trapped as a whole. No, there was really no major trapping, I would say. I think so. These people look like they got out quite well. No, that would have been sellers getting out. So that would be buyers got in here. I can see. Yeah. Okay, I'm starting to spot it now. So sellers got out here. Buyers got in here on this level here, selling. Pushed up, and they decided to get out. Yeah,
some biggish
and
numbers.
Then they pushed down. Yeah. Few buyers got trapped here. They were thinking it was a range, 380, 267. They must have thought this was a ranging market, so they were buying the bottom of the range, and didn't work out for them, and then took them out. And you can see a lot of buyers getting stopped out, basically here, right below where you would expect anyone. If anyone got in at, let's say like a position like that, put their stops a little bit below the last low, and as it broke down, you could just see them getting stopped out there.
Last low, yeah.
And and then
a bit of volume at the previous low as well.
Oh yeah.
Same again, just starting to go again.
That's it. Where's the previous low?
Interesting stuff.
Right here.
Yeah, that's it.
So people getting
a few buyers coming in ahead of that. Now. Yeah.
Interesting.
They're thinking, hang on, there's only half an hour to go. There's only half an hour to go. This is not going to work.
Really interesting. But yeah, I mean, I'm excited for FOMC. I do like analyzing, especially right before high impact news. Looking at the footprint is always funny to look at, because you just see such big numbers just entering, well, not entering, but exiting the market. Everyone's just trying to rush out right before the news.
I think when we get towards it, we probably should be looking at your S&P chart. That might be good.
Oh yeah, absolutely. I mean, we still have 30 minutes.
Yeah.
So let's have a look at the pound, how that looked. 6B. My internet's very, very slow today. I'm not entirely sure why. I haven't done any changes, but oh, so we were that's a very nice range. All that's a beautiful range.
It's pretty much where the, it's where that yesterday's low was as well. That kind of trap level before it bounced up again. So yeah, but I think the euro's sort of slightly weaker than this one. It's making new lows, whereas the pound is not yet making new lows. But it looks very. If it weren't FOMC, I'd say this looks very heavy. So it's struggling.
That's quite interesting. These levels didn't really hold. It kind of rejected a little bit for a minor push, but then just broke through. And then
on the 130 is a big one above the market. 130 on the on the future as well as the as well as cash as well. So it's a bit of I think like people coming out and taking profits or selling it at 130.
Yeah, absolutely. And was any gaps in volumes where? So this level held very nice. This gap in volume right here. That held quite nicely. And then you got another one all the way down here, which it hasn't tested yet, but who knows, maybe. But yeah, let's have a look at the footprint on this. Let me just get rid of that because volume footprint. Let's see where. So we had the Asian session. All right, if we go where London starts, really. A few people might have been stopped out at the top here because it just kind of broke a high. And yeah, well, actually, no, it didn't really. We had people take profit more than buyers taking profit rather than sellers getting stopped out, which was. That's only if someone sold there, to be fair. I mean, that was at the beginning. No one would have known that was a ranging market at that point, to be fair. A huge number here for the pound, 629. Very random spot as well. Just couldn't tell you why that happened. Very random spot. Oh, 625. I wonder if that was a similar... Yeah, I mean, could be. It doesn't really add up. It doesn't really make sense to me. There's no reason why. It's just, I think that's just coincidence that they happen to be similar in numbers, but because it doesn't really make any sense. If someone sold there, why would they get out there?
Maybe they were going for the break this morning, the break of yesterday's low. That could have been. We can work out.
Yeah, could have been. Absolutely, yeah. Yeah, I think you're right. And then we had a bit of buying coming in, which failed dramatically. And yeah, I mean, it's been pretty boring, to be fair. I wouldn't have seen much opportunity on this market today. I mean, it did just range, right? Like there wasn't really anything.
It's been stuck. It's been stuck for a while now. So just went for resolution.
Yeah. I mean, yeah, you can see just on the volume profile, nothing in Asia, even though it did go down. And then just the whole day, perfect kind of B shape volume profile. But yeah, interesting. I mean, I don't like looking at the shape of the volume. Some people have this tendency to be saying basically, you know, if it's like a B shape, it indicates an uptrend. I don't believe that to be true, really. I mean, if the chart is showing something else, I wouldn't. Yeah, I've never really believed that or taken that too much into account. I mean, some people swear by it, and it does. I mean, it is kind of true to a certain degree, but
yeah,
I would always go over what the chart's actually saying. It's clearly not an uptrend today, so even though it's a B shape, I wouldn't call it an uptrend.
Yeah, I remember from way back looking at the market profile, you know, all the letters. You know, you get a breakout and you get all the letters going higher or lower or whatever it is.
Oh yeah. Market. I think we've got it here. Time price
So TPOs.
opportunity.
That's what
Yeah.
they were called. TPOs. Yep.
Once it loads, there we go. I mean, if you
Point of
zoom
control.
in, that's it. You should be able to see all the letters. There we go.
That's it.
Yeah, I mean, it's overly complicated, isn't it?
Yeah, it's worse than my Elliott wave stuff. You know, you got the it's alphabet soup. But
Oh,
you know,
absolutely.
you can make some sense out of it. Then brilliant.
Yeah, absolutely. I mean, for me, I mean, market profile and volume profile, they to me they kind of show the same thing. If I
Yeah.
overlaid a volume profile, I've never seen the reason why I would need to use the market profile, so to speak. I think the volume profile is good enough. It's much more clearer, in my opinion. But again, I mean, it's entirely up to people, right? Everyone has their own way of doing things.
Yeah,
But
there's so many tools out there, isn't there? On
that's it.
any technical analysis package, you'll see so many different indicators and ways to analyze the markets, and you know, who's to say what is right at the end of the day?
Yeah, exactly. I mean, if you can make sense of it and it works for you, then more power to you. That's what I say. Whatever works for you. If you can genuinely, you know, be consistently profitable with it, then great. I mean, doesn't matter what you use, you know, whether you trade using the cycles of the moon as an indicator. If it works, you know, do it. Like
Sunspot activity, moon cycles.
yeah, I think there
Yeah,
was
there
some.
are people out there that do this.
Oh, absolutely. People, you know, who are really into statistics and data. They measure the most random things, and you know, like the phases of the moon, and like what you said, astrological stuff. And they base, you know, they find some kind of pattern that, you know, at every full moon, maybe the market does something specific, and they trade with it. And look, I can't tell you how. If they're profitable or not, I really can't. I haven't looked at their accounts, obviously, but some people swear by it. I mean, I've never looked into it, but who knows? Maybe I should start tracking the moon cycles. It might give me better trading opportunities.
Well, I think if nothing else, it can help filter things out. It can make you look for your opportunities only on certain certain moon cycles or whatever it might be. And you know, I guess you get less noise. I don't know whether it works or
Oh,
not,
absolutely.
but
I think you do have to believe in something when you're trading as well, because otherwise, if you're using too many different ways of analyzing the market in one strategy, you're always going to spot something that looks negative to your trade, right?
Yep.
It might be, I mean, it could be anything. It could be, oh, this is a Fibonacci level, and you know, I'm buying against it or whatever. It could be, you know, you'll always find something to support the other side, right?
Yeah.
So it doesn't,
or worse still, to support your side when the facts tell you otherwise. That's the more dangerous one, in my opinion.
Oh, absolutely, absolutely. So you know, you kind of if something gives you a bit more confidence, I guess, in the market, where you can, I don't know, you just feel more at calm and you're not constantly looking for doom and gloom, then maybe I can see it work. Almost ignorance is bliss, you know, in a weird way, and you just stick to really good risk management. That can work. Because like I for example wouldn't draw out a trend line. Like, I would happily have shorted that market, for example, ignoring that there is potentially a trend line, you know, to the upside, right?
Yeah, I guess I'm the same. I'm the same. I like horizontal ones because I think they're a lot more meaningful because they're proper levels of support, real levels
Oh, absolutely.
of support and resistance.
Absolutely.
But,
Absolutely. But like, you know, if I was using trend lines in conjunction, then I might not have shorted that. I mean, I didn't short that market, but if there was like an opportunity, I would have happily shorted it, you know, because I know there's an area and I'm looking at potentially shorting the market in these boxes and buying it when it comes back down the other side. So like around here, now we're back to this area, I would be looking more into a buy position than a short position. And,
Yeah.
you know, if it wasn't FOMC, I wouldn't assume that these are necessarily people getting out the market. I would assume maybe this could be actually new sellers coming in and they're getting trapped. And, you know, I can see bigger numbers getting out here. I might be looking for a small buy position, you know, at least
Yeah.
back up to the point of control, maybe. Really tight stop just below, well, not even below here, but below that 1,000 contracts here on the sell side, and just ride the wave maybe back up to the point of control. I'm not expecting, you know, we're making new highs or anything, but just a short scalp. But yeah, if there was, but I'm sure there's so many things conflicting, you know, I'll say definitely do not buy here. You should be selling here or something. So if I use too many things in conjunction,
Oh,
I don't think I would ever enter the trade.
no. And I know there are a lot of people that have, for example, oscillators, and they might put maybe 3 or 4 on, and more often than not, they tell you the same thing. You know, if you're looking at an RSI or a stochastic or whatever over the same time frame, they're going to be very, very similar. So I think you can over clutter the chart sometimes.
Absolutely. Absolutely. Yeah, I never understood it when people use RSI and stochastics in conjunction. I mean,
I think there's a question. A question come through there, John.
Oh, a question came through. All right, let me stop sharing the screen so I can go back to StreamYard. Sam, can you please tell what is the volume footprint script you use? Okay, let me share it again and I will show you. So it's actually built into TradingView. It's not something that you have to download or anything like that. If I add it to stage again. So you do need the TradingView Premium. It doesn't come with the other packages. So you have to, get the most premium package or whatever it is. And under the actual charts itself, where you can select, you know, candlestick, line graph, all that stuff, Heikin-Ashi, there's volume footprint. But do bear in mind, it only works with futures and crypto. It wouldn't work with CFDs, okay? So it will only work in the futures market. And you will have to subscribe to the CME data feed, which you can do through TradingView as well. So if you try to load it up on like a CFD chart, like if I just do Forex, for example, got to get rid of ES, obviously. That's not and then just do, I don't know, pound US dollar. It should say, sorry, cannot do it. It should do at least, unless it uses tick volume. Oh, okay, it uses tick volume then. Okay. All right. So you can do it with CFD charts, but these aren't actually contracts or lot sizes or anything like that. This is literally tick volume, which is useful to a certain degree. But to be fair, I've never tested it with tick volume. If it does work, I really haven't. So I don't want to say, oh yeah, it can work perfectly with tick volume. I don't want to say that and be wrong. But my initial guess is tick volume is because you're genuinely looking for people trapped, right? And where people have put a lot of money on the line, and tick volume, I don't think will really show that, so to speak. So use it with your own, use it with caution. If you're gonna do it with CFDs, that's all I'll say. But if you can use futures, then yeah, that's where you really, because then the data is actually real, so to speak. Like these are real contracts, real people, and the amount is actually real. It's not just how many ticks or how many micro movements there were within that area. But yeah, how long have we got? We've got 15 minutes until FOMC. It's always interesting. I mean, sometimes the market doesn't move much, to be fair. It really just depends. I mean, sometimes it could be really subtle. But we'll see how it is today. I think judging from the sell-off we've had, I think Actually, no. I mean, it always sells off before FOMC, to be fair. Well, not sell off, but like you always get people exiting, basically. So you're always going to find that.
Yeah, you should get quite a strong knee-jerk reaction when it starts.
Yeah. So it should be interesting. Not much to analyze, really, just because of FOMC, sadly. I mean, obviously, it's 0 point taking any trade. So to the viewers, I do apologize that this might be a little bit boring, as essentially there is nothing trade-wise we could do, because it would be insanity to enter a trade at this point in time, unless you're planning on getting out in the next few minutes. And
quick scalp.
everything. Exactly. Maybe you can do a really quick scalp, but again, highly advised not to do that, because it's very hard to predict. Like the market almost does the opposite of what you'd expect in a weird way a lot of the times, just as people get out. Like, it's very hard to predict. But it looks like we could be doing a head and shoulders pattern, maybe. Potential head and shoulders coming up. Maybe. Who knows? But again, I don't do patterns too much, but I like to sometimes look at them just to give an idea of what other people might be expecting to do as well in areas. So when I'm trading, if I see something that's clear, like a clear trend line or a clear pattern, I would anticipate that people will start buying here because they're thinking head and shoulders could happen. Or, if it comes back up to here, I'll certainly anticipate a lot of people will be probably wanting to sell because they're seeing that pattern occur, and they might get trapped. Or
I guess you got, if it is a head and shoulders, you've got those people that are trapped above the left shoulder.
Yeah,
the buyers up there.
Excuse me.
So that could be interesting.
Absolutely. And especially, you're always looking for zones of liquidity, right? Like we had a kind of I would say that's a legit trend line. I mean, it didn't last very long, but we had, 1, 2, 3. So technically 3 points broke very quickly. And tested it from the other side as well when it broke through. I mean, that would be considered a legit trend line, I would say. We had a longer one here, I would say. If we were to draw it, which kind of also
finding support
works
there
out
a little bit.
Yeah, exactly. So it's always good to look at, although I don't trade trend lines or anything like that, it's good to sometimes know where other retail traders or other traders as a whole are looking to potentially buy, sell, where their stops are going to be. Because if you could figure that out, you know where the money on the chart is, right? And a lot of the time, if you're seeing someone's trapped, you know exactly where the market's going to go, right? If a lot of people bought here, you know their stops are going to be below here now because they bought, because the trend line, the market's going to take them out. And it looks like that's exactly what it's doing, right? So yeah, the people who bought, the market is nice and quickly going to take them out, before, and then after that, who knows? It could continue, it could stop, it could go sideways, it could go up again. Very hard to guess, but
kind of search and destroy.
Exactly. There we go. Just wicked right a little bit below.
Yeah.
It's taking out people's stops, and there we go. So knowing where the liquidity is in the market is always good to know what other people are potentially seeing and might do. Because then, if you know what other people are doing, it doesn't mean they're going to be right, but they could get trapped and be very wrong, especially if it's really obvious, right? Yeah. Especially when something is so clear that even someone who's just been in trading for a month could spot, right? If it's like a really clear pattern or something really obvious, everyone else has spotted it.
Yeah.
And therefore there's probably a good chance there's going to be a lot of money on the table at some point.
Yeah.
So
waiting for it to fail is a good idea.
Essentially. If it's too perfect, and you're eager to jump in, I'll say step back. Don't be the first person, to sacrifice yourself. let other people do it and see how it plays out. Because if it's too perfect, a lot of the time, sadly, it might be a trap.
Yeah.
I'm trying to see if we could find like a really perfect pattern of some kind. I mean, but then again, sometimes it does work out. I mean, especially if you're not looking at the volume, you have to kind of like anticipate where people are. But if you are looking at like the footprint, obviously naturally, then you can see them. They're not hidden, so you don't have to do it as much. But still, it's a good idea to, in terms of, because you don't want to be staring at the charts all day. So you can mark out areas where there should be activity around there, right? Like if we broke this trend line, like if I drew that trend line a while, that there's going to be activity below here, below this trend line. So set an alert there, broke it. Now you can start looking at the charts. Obviously,
I wonder if.
Yeah, sorry.
Yeah, I was going to say. I wonder if there's a point where the closer you get to that low of the bounce, that there's a very high probability they're going to take it out. I mean, one of the strategies that I've developed over the years is actually sort of not buying the break of a level, but buying it literally a fraction below it, because they're going to push it through, so that you're not actually paying slippage and all the rest of it as the market breaks. If you're a breakout trader, you're getting in just before the break, which some people say is not a great idea because you haven't got the break. But if you get so close to a support level or a resistance level, then there has to be a really high probability that it's going to go at some point.
Yeah.
So I wonder whether getting in just literally, a couple of pips or ticks just above the support level is the way to play this. Just to go with the break.
Yeah. And how do you spot that then? If you how do you spot it that this might actually break through and continue rather than be a false breakout?
Yeah. Well, for me, if I've got a larger pattern or something behind it, then I'm kind of anticipating a directional move anyway. So if it's in the direct, let's say for example that one, if I were bearish, I had something that said that it has to go down a lot further. Then seeing that weak rally and getting and selling short just before that support goes, you get that extra bit of momentum on your side, and you're not kind of paying slippage, wider spreads and all the rest of it as a break trader would be doing. You'd be getting in just before the break, kind of thing.
Right.
So
right.
I just wondered whether on the really short term stuff like that you're doing, whether there's that kind of that there's a magnetic pull of that pivot point, and how close do you need to get to it before you know that it's going to go? It's going to go.
Yeah. Yeah. I mean, for me, it depends. I mean, I wouldn't know. Sometimes I can know before. Like earlier when I was stuck in where I shorted the market here, and when it started coming back against me, the only reason I got out, not only because I was obviously in a position I got out break even, but the reason I knew it was just going to break this zone, but it wasn't going to be like a false breakout, was just the sheer volume, right? And the volume started, the buy volume started near the bottom. If the buy volume started near the top, I'd be a lot more at ease that these could just be buyers getting trapped. But when it starts at the bottom, right, especially all these iceberg orders where it's all the same, that's where I know it's got momentum. And it's also how the candle formed. Like I said, it just jumped, right? It was so quick. I like to also look at the candle forming, because just how it closes doesn't always give you the full picture, but you can, a candle can look really bullish or really bearish, but it could have struggled its way up or down. Does that make sense? Right?
Yeah.
As it was
as like the example you showed before, where it was just grinding higher.
Yeah. Which isn't as good as if it just goes like with ease. There was no real pushback. There was no. So in that respect, tick volume can be actually quite useful in a weird way. But yeah, so it was a multiple of factors why I knew that after that it's going to break through this high. It's not
Yeah.
going to hold, and of course, you know, the heavy volume coming in, and the fact that the volume started near the bottom rather than like here was different, right? Because the buy volume was all trapped at the top
Yeah.
of the candle, right? So as it moved against and the sell volumes coming in the bottom, it's a good indication we're going to go down, right? And we did go down, but just not down enough for me to hit my take profit, annoyingly. But literally like 1 point away or so, like a few points away, boom. But and then, you know, it happened here. So, and you could say even, you know, there was trap volume at the bottom, to be fair, 400, you know, quite a big number in general. That 911 is very random. I'm not entirely sure where that came from or why that came. It's a bit weird, but some things you can't figure out always. I mean, just got to accept it. So yeah, I mean, it really depends on the situation. There's no like one rule I can kind of say, oh, that's how I can identify if it's going to break out or it's going to be a false breakout.
Yeah.
There's
It's not like a sort of a 99% retracement or something like that.
Yeah, no, there's no like specific rule or anything. I think a lot of it is just trying to use your logic, and you're going to get it wrong a few times. Like sometimes it is hard to read, trying to figure out who is who. But I like to always put a story together, you know, like in my mind, these are people, or just one person. Like this is one person who entered a trade. Like in my mind, the market is made up of 10 people. You know, it's not millions and millions of different traders. It's just 10 people. I ignore all the small numbers. Just they're meaningless essentially. And this is like, you know, person A trying to buy out this breakout, right? From here, trying to buy it up, sorry, and it starts failing, and you know, here's person B getting in for a buy near the bottom, and like I'm literally making the story in my head, and then, you know, person A got out here and person B got out here, and I'm just using the volume to try and match up what would make logical sense. Now, sometimes you are going to be wrong, but if you have that story and you kind of figure it out, sometimes it's very clear, other times it's not as clear. You can kind of figure out what's more probable to happen next, so to speak, you know?
Yeah, the balance of supply and demand at that point in time.
Exactly. And we have 3 minutes until FOMC. So
eyes down.
exactly. I'm just going to clear up the charts a little bit, make it look a bit more neater, because I do recognize there's just way too much stuff on my charts always. Because I'm always drawing little boxes and lines as I trade, and then forget to actually clear them off the chart when I finish. So I always spend a good few minutes every day just when I start just clearing up the charts, because I'm a bit too lazy to do it before I walk away. So maybe it's time to change some old habits. But I'm pretty happy with the chart. I mean, this is an old level, don't need that anymore. But there is a level there now. And these levels, they've been broken through plenty of times. Same with this one. Not interested anymore. And yeah. Oh, there is a little gap in volume level there, which I never spotted. Sneaky. Sneaky. How did I not spot that little level there? Which makes sense why it stopped here now. Aha. So yeah, got to be eagle-eyed sometimes.
Yeah.
And then get rid of all these. And we've got 40 seconds.
Okay, here we go.
Here we go, the big one, FOMC.
Do the spreads widen out on the minis at all? Just before it comes out?
You see. Yeah, I think that's pretty standard. Yeah.
Certainly on currencies, you get a bit of a spread widening because the market makers don't want to take too much risk.
Absolutely. Here we go. 11 seconds, 10 seconds.
Okay.
What's your prediction, up or down? I'm joking.
Absolutely not. No prediction whatsoever.
Here we go. Bit of
Okay.
chaos.
Yeah, Euro 108.65, 108.73. A little bit
Oh, it's
higher on the
going up.
Euro. Oh, 180, 83. Yeah. So that's a weak dollar initially, strong stock market. So that must be a dovish decision. Lower interest rates, good for the stock market, bad for the dollar.
Yeah.
Let's see if it holds. It'll all be reversed. Yeah.
I think it's pushing up. Oh, got a few. I think buyers exiting, taking profit at the point of control. You're going to see a lot more, speed in terms of people getting in and out the market. No one's holding stuff.
Yeah.
I think because it's just too chaotic. I wonder what the depth of market is showing. Oh, very low numbers on the depth of market, extremely low.
Yeah.
Which would indicate no one wants to get in, really. There's no pending orders. Everyone's doing market orders for some reason, if they are getting in. This is extremely low numbers.
So
I've rarely.
So I guess nothing major on the announcement.
I mean, it could be. It just could be people being very cautious.
Yeah.
Because of the chop, no one wants, or a lot of people cancelling any pre-existing pending orders. Oh, we got 100. Oh, I saw a big 140 here on 5705. 5705. I forgot what the last digit was. But around 5705, there was a huge amount of sell limits around here.
Yeah.
Little pockets.
Very muted on the currencies. Just a little bit of a slightly weaker dollar, but nothing to write home about. Let's see. Gold is a little bit firmer, but not a whole lot.
Nice.
Yeah, a bit muted at the moment. Maybe they're waiting for the.
Yeah, I think
speak.
Again, the conference is quite important, right? So
yeah.
And this is kind of what you expect. The market, it moves a lot, but it's not really going anywhere.
Yeah.
But there was a lot of sell limit orders right here in this area. I mean, they could be spoofing the market. I doubt it, though. It's a bit risky to do it if the market's quite volatile. But I mean, they have algorithms for this stuff. So, there you can just see it popping up around 00. Yeah, 570500. There's 175, 160. I wonder what would happen as the market goes into that zone. If those sell limits will hold, if they actually get filled,
yeah,
or do they just magic? Oh, it just blew right through them. Look at that, cleared them out. The buys just completely cleared them out. Wow, at 5705, 300. Yeah, you can literally see there. Those are the sell limits being got cleared out. That's why you got a bit of a bigger number there. Oh, we got another one here at 570825. Another big chunk of sell limits. 570875, I think it was. So right here. Really cool. But yeah, as expected, basically, choppy market, but I mean, didn't really do much. I mean, there was quite a bit of a whip from the downside and then up, but it's not actually really going anywhere. It's just a lot of volatility, but that's about it.
I guess it's trying to resume the fact that it's up on the day. Maybe it's trying to, there's no negative surprise at the moment, so maybe people are thinking, maybe it does want to go a bit higher.
Oh wow! Sorry to interrupt, but I just spotted on the depth of market 500 something contracts on the buy side around here. If it dips down a bit below, it will become visible again. that's probably one of the biggest numbers I've seen ever. I've
Yeah.
very rarely seen 500 on the depth of market. I kind of want it to dip down around this area. There it is, 500 at 570000. So 57000 got a huge amount of buy limits.
Oh, they're
We're
buying
just
under the
about
mark. Yeah.
there. It is, and they've been filled. The
Okay.
sellers actually cleared them out. That's why we've got these massive.
Yeah.
Wow. Right there.
So there's a bit of a battle going on there.
There's a huge battle going on. I've never seen. I think very few times have I seen about 500. That would have been bloody hell. It's huge. Sorry, I geek out about stuff like this. I mean, I know this probably isn't that interesting to watch, but I do geek out. I mean, if there's something you want to show, by all means, Howard.
Yeah, let's
show your screen.
On the quick. Just 1 second. There we go. Share screen. And so just a quick look at our friend the euro. Okay. So yeah, that break we saw earlier. Now they're coming in a little bit at these lows. So again, that'll be interesting to see whether that can start to gather momentum. I think once we get above this this point here, was it 109.18, 19 or thereabouts on the cash, then that would be quite a big acceleration signal. But at the moment, it just seems to be, you know, people perhaps who sold the breakout, they're getting a bit concerned and a bit of a bounce at the moment. Gold that we were looking at before, or we're going to look at gold, that was stuck in a bit of a range, and we're still stuck in that range. Gold is not really breaking out. A bit of a triangle or whatever you want to call it. So yeah, static. I think maybe we start to break above up here, these lower highs, that signal. But at the moment, not in a hurry to do that. What else have we got on the yen? So dollar yen had a kind of knee jerk down. So a little bit of struggling up here. The people who bought the breakout up here, but we've got this big round number at 150 as well, which could be a bit of a hurdle for this this rally.
It's quite a strong psychological level.
A little bit of struggling up here. Yeah, and I know they get a little bit concerned when it ramps up to these big round numbers, and you know, often people the market often turns around these points. But yeah, I think quite muted really as far as the currencies are concerned. Not a lot, just that kind of rebound off of the earlier lows for euro dollar, yeah, I think waiting for the for them to start talking, really, I think.
Oh, absolutely. I think the conference is gonna, I mean, realistically speaking, today is going to be obviously, you know, but tomorrow the market should start picking up again. I should hope so. If there is clarity, if there's more confusion, I don't know what actually. I mean, we're not going to be watching it because the live would end by then. Yeah. So it ends when. Yeah. We've only got 22 minutes or 21 minutes right now left. So when the conference starts, the live ends. But
yeah.
I mean, it could depend. I mean, sometimes if there's still a bit of confusion and within most traders, then we might not get that much clarity or confidence in one direction. So who knows? But
yeah, I noticed on the S&P was just stuck inside yesterday's range, really. You know, we just
yes,
that could be a good breakout trade. Once we break yesterday's high or low, that could be indicative of maybe the next 1 or 2 sessions, I think.
Oh, absolutely. Yeah, you're absolutely right. I mean, if you were to look at a daily chart, it will be an inside bar, wouldn't it?
Yeah, we stay here, and then tomorrow we get the breakout. It could be one of those situations.
Well spotted, actually. I did not spot that at all. Very well spotted. You're absolutely right. Yeah. So a lot of people, if it closes within the range of yesterday, a lot of people are gonna notice that, especially price action traders and people trading candlestick patterns and whatnot. They're gonna notice that. So we should get some movement, hopefully. I mean, today wasn't actually that bad in terms of movement. It was just in my particular situation was very annoying. If it worked out, I mean, if it dropped literally a couple of points, it would have worked out, and I would have been like, today was a great day.
Yeah, just it's fine margins, isn't it? Makes all the difference.
I mean, overall, it wasn't actually a bad market to trade today. It made some very clear. I would say there was some pretty clear structure to it as well. Yeah, like I think there's probably even a Fibonacci at play there. Let me get out Fibonacci tool. I'm pretty sure. I guarantee that would be a Fibonacci. Yeah, it retraced back to the 0.5 level, the 50% level, and then continued to the 0.236 extension. So it was a perfect Fibonacci basically earlier today. So it was actually quite a all right market to trade, I would say. I just got very unlucky with my first trade, but my second trade was right. So
it happens. It happens. Not every day is going to be perfect, isn't it?
No. And it looks like the market's pushing up now. We're back at that area. That area kind of got broken, so I'm not too fond of it. But yeah, well, it looks like the bulls kind of took it. What's the depth of market saying? Now the numbers on the depth of market are back to normal, I would say. Kind of the usual range of numbers that you would normally see, around like 30, 40, stuff like that on each level. Whereas before we had some really low numbers, but then one massive 500 something contracts. Crazy amount. Crazy amount. But what can you do? What can you do? To any viewers watching, if you have any comments, any questions for myself or Howard, please feel free to drop them. I've noticed we didn't see Robert today. Robert, if you are watching, make yourself known. I think this is the first time Robert's missed a live session. Maybe he was in an earlier session, who knows? Or maybe he had some other commitments. He couldn't come watch. But yeah, I'm sad not seeing Robert in the chat. Right. Let's have a look. I'll share my screen again. Entire window. Oh no, entire screen. Here we go. Let me know if you can see that.
Yep, all good.
Yep, cool, perfect. Let's have a look. What's going on? Yeah, I mean, there's just nothing really. Maybe on a 5 minute, you can see a bit more. But there's nothing really. Apart from that one order on the depth of market, that was huge, 500, right? That was here. There was nothing that I would say either buy or sell. I would only have a bit more of a bullish sentiment just because I saw 500 something contracts executed. Got wiped out on the pending orders, basically. So that would give me a bit of a. But if you missed that there's nothing really on the footprint that would give me a huge bias to either side, really. It's
no big volume coming through yet. kind of thing on the breakout?
We have volume now coming in. I'll say a bit bigger. A few contract 500, 400. Whereabouts is that? So not quite on the breakout. The high of the day would be up here.
Yeah.
I guess you had like a little. It's really hard to see on the footprint if I look at the actual candlesticks. Yeah, we had like a little tiny little range earlier today in that area there. We're kind of breaking out from that range now. But no like pivotal, massive point or anything. So
Yeah.
but we are seeing a bit bigger volume coming in.
It looks to be nice.
Yeah. And the numbers on the depth of market are pretty standard. Yeah, I can't imagine anyone really trading right now. Like anyone serious, really, really trading right before, 15 minutes before for the actual press conference.
Yeah.
But we are seeing bigger numbers come in. Let's see what the let's do the pound. Yeah, let's do the pound. Let's see what sterling is saying. So FOMC itself was this candle here. Yeah, I mean, like, actually gap. There was areas where there was nothing executed. I mean, this is just the delta.
That's kind of knee-jerk reaction to.
Yeah, it just gapped through. There was zero on the sell side, a tiny bit on the buy side, and there was actually, it just there was no one in the market essentially.
Yeah.
No one was trading. But it's weird though, isn't it? Like it kind of, in a strange way, doesn't make sense how a really lack of liquidity can actually move the market. Like it to me, that never really made much sense. But yeah, it is weird.
Yeah, so I think just the kind of knee-jerk reaction after the announcement to sort of sell the dollar and buy the stock market, and then they kind of digest it and see where we're going to go.
Yeah. But otherwise, there's nothing really. I mean, this is FOMC. Naturally, if we weren't doing a live stream, I doubt you'd be watching the charts right now, Howard. I certainly wouldn't. I certainly wouldn't be looking at the charts wanting to trade. I'd be taking the evening off, relaxing.
But I must admit, I find that once you've had the announcement and you had the move, and if you've got a view that was prevalent before the big news hit, and it still goes after you've had everything, then it probably isn't a bad time to have a crack at it, because you've got people that are flat going into it, so that when they come back into the market, they can really drive it. So it's one of these situations where you'll get a rare move at the very end of the day. On the currencies for sure, if there's not been a whole lot going on during the day,
Yeah, no, absolutely agree. It can very much pick up after the conference, and once there's clarity in the market, then you see it pick up, because then everyone's on the same kind of starts agreeing, Yeah. So, but obviously, right now, I mean, it's sad that the live stream coincides perfectly with FOMC, but it's quite interesting to look at the same time. Like I very rarely do I actually look at the footprint and analyze it live during FOMC. Hence why I've probably never seen 500 contracts on the depth of market before, because I'm never looking at it. Why, I have no interest in ever trading it. I just look at the after effects the next day and be like, oh, okay, it was positive. All right, cool.
But yeah, it looks like it's holding up quite well though. It's had a sort of a move post the announcement, and now it's just holding. So it looks to be, you know, quite nice. But maybe a bit of a base going on there.
Yeah. Oh, we got a really
but-
nice gap in volume on the pound right here,
Yeah.
which we're just about to approach. Really nice one. So
See whether they can take it through or not.
oh yeah, I think ultimately it will break through. But 10 minutes until the conference, I think again the volume's dropping. Like there's just nothing there.
Yeah.
So maybe
Yep.
if I go back to the candles, so I'll see it better on the candlestick chart. I mean, actually, that was quite a big push up. Looking on the candles, the footprint is very deceiving in terms of movement. It's hard to judge how much the market's moved using just a footprint. But when you look at it in candles, you're like, oh, actually, that was quite a heavy push up.
And it's from that area of and it's from that big area of support as well, isn't it? It's just it's for whatever reason people seem to want to buy it down there. So I'd be interested to see whether it holds, or you know, if it can stay here and then start to go higher, then that'll look quite good, or if it's just going to drop off like it did before.
Oh, absolutely. Like we've had how many tests of this area? 1, 2, 3, 4, 5, 6, 7, technically 8. And then I guess I could just count that as one big test, 9. Yeah, I mean, that's a very strong level. Really holding up. I mean, is it a psychological level? Not really, no.
No, I don't think so. It's just kind of stalled. It stalled at 130, and when it comes off, they step in there. I don't know. So just seems to be a little mini range for the time being.
Yeah, because I mean, I would have drawn that level out because it's a gap in volume, but there's also a gap in volume here and a gap in volume here as well. So I would have been interested in it, but I would not have expected it to hold that much. Normally it breaks through after, you know, there might be a little bounce. But there's loads of gaps and volumes everywhere, you know. I mean, some of them do fail. I mean, this wasn't really a great one anymore. Got the point of control at the top. Yeah, that's just, it's weird. I mean, it's strange why certain areas just hold a lot better than others. You can't really make reason out of it. I guess you could look on the actual volume profile, something I don't really like to do because it's not truly accurate. But if you actually look at the buy and sell volume, so blue is buy, the sell is gray, there's a lot of more buy volume. So when this area was created, it was a lot of, basically it was just a lot of buying. There was hardly any sellers in the market, and maybe that gives more people more confidence to, when it gets back there, to keep buying it and keep defending that position. Maybe hard to say.
Yeah.
But yeah, those are the areas. I'll be interested if we see a rejection when we get to here. I mean, we're almost there. We're talking like how many pips away?
Yeah, they're thinking about it. They're thinking about it. It's like I think if you draw the trend line across the last few peaks, I think it's kind of settling above it. You know, it really kind of. I'd want to call it a technical breakout.
Right. Yeah. Yeah, I see what you mean. Yeah,
like a base pattern. You know, kind of like almost a triple or quadruple bottom on that thing there.
Oh, absolutely. Yeah. I mean that's quadruple. Yeah, you're right. Quadruple, triple bottom over there.
Never seen one of those before. Yeah. Never. People
pattern.
say you rarely see. So it could be a very strong level that.
You could coin that term. So Jannie had the Jannie candle. You can coin the Howard bottom and call it quadruple.
nobody wants to see that. No, I'll settle for quadruple bottom. That'll do me.
Quadruple bottom.
A rarity.
You're right. It's very rare you would see it test 4 times in a row like that.
Yeah, I
So
think
we've
most people say that, you know, even triple is quite rare because usually the third test goes through.
Yeah,
But this is quite strong.
absolutely.
So see what happens on this this resistance area.
Yeah, I'll be interested.
How's the euro looking on your footprints? Is that breaking through, or
Let's
is
have a
that
look. If I load it up,
looks
why is
quite
that not working?
looks
Okay.
quite strong to me on the shorter term stuff? But
I'm assuming. Where are we in the larger scale? Okay, interesting. The euro did have a gap of volume that it is at right now, which lines up with the pound.
Yeah.
But in terms of the volume, let's have a look. Nothing major. I
small.
mean, you could say there was an iceberg order there.
Yeah.
Loads of 200s just kind of grouped up. So this could become now support as which kind of looks about right. Every time it's dipped around here, it seems to have rejected out of it.
And the numbers are quite small, aren't they? On since that thrust higher, the numbers are quite small. The volume numbers.
Yeah, but that was at the FOMC release, so
yeah,
we'll see. We'll see. It's hard to say whether it really was an iceberg order or just a coincidence. Who knows? Because again, on the FOMC candle, I don't know. I mean, it could be, but
difficult to say, isn't it?
Yeah,
because I'd imagine there'll be people that went short on that push to new lows. Maybe some of those people are covering.
Could be, yes. I mean, it could be stops getting hit, people getting out, because it wouldn't be in line with the structure, but at the same time, very hard to say. Very hard to say. I mean, FOMC really does cloud it. Like high news does cloud it because you're trying to think who would logically be trading exactly when it comes out. Very unlikely. Like maybe obviously beginners or something, but they're not going to show up on the chart, so to speak, right? They're not going to be placing 200 contracts. Like it's just not going to happen. So these obviously bigger players, and are they really going to be entering? I don't know.
Yeah, not until everything's out the way, and then you get some kind of attempt at up or down.
That's it. So it's hard to say. It's hard to really know for sure. So it's better when you don't know, just ignore it and don't trade it. Just leave it alone. Come back. See what the pound, are we rejecting on that resistance? Bit of a wick rejection, but nothing. It seems to have slowed it down, but I wouldn't call it a full-on rejection yet. We'll slow down, but there's no indication that it's actually going to go down yet. But if it was to go down and retrace, it's a hard one, actually. I would say probably down
got some old resistance there. That's
just above the point of control. We had a little gap, but nothing major. And I wouldn't call that a true gap, to be honest. There's too much volume in it. Hard to say. I mean, it could just go from where we had these wick rejections, which would line up with that high there. Could see a retracement. But I wouldn't really, yeah, and the volume really drops off there. There's a nice gap. So that's the kind of gap area, which would line up a little bit. So yeah, I could see a retracement coming back down to these before a continuation up again. I could see that happening. But
I'll see what the what the conference brings.
Oh, it would have started now, and that would mean it is time for this session to end, sadly. But yeah, thanks everyone for watching. Howard, it's always a pleasure. I don't know what session I'm in. I'm in the third session again tomorrow.
Absolutely.
I don't know if. Are we the whole week together?
I think a lot of it. So
okay, perfect.
Yeah, so look
great. Well,
hopefully, yeah. So see you tomorrow.
Awesome, Howard. All right, see you tomorrow. Have a good evening. Thanks everyone for watching.
Take care.
Thank you guys. Bye bye.